Hey, look at that. Are we live? I think we're live. Yeah, we are live. All right, good to know. What's up, everybody? How's it going? Welcome to Benzinga Live. I'm Spencer Israel. Aaron Bree will be joining me in a minute. I'm back in the saddle after missing a couple of days. Why is it so like it feels like every day you miss feels like 2 days, right? So if you miss one day, it feels like you missed 2 days. So it feels like I missed 4 days right here. And because I'm just totally out of it and uh feel like I just need a day to get my bearings in terms of like the market and the news flow and just what I missed. You know what I mean? Anyway, how's everyone doing? What's up, Justin? I think they're wrapping up here on live trading here. So let's go ahead and roll that intro and start the show. This is Benzinga Live. Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wojacek from Trend Spider. We have a
breaking news.
Hey, yo, hey.
What up, Spencer?
Yo.
How was Vegas?
Are you impressed? Are you proud of me that I made it in today? Are you impressed at all?
I honestly didn't even know you were out yesterday until like the show was about to start. So
All right, that's good to know. My trip was great, man. It was exhausting. Rule of thumb: don't go to Vegas for more than like 3 days at the absolute most. I was there for 3 full days.
what were the highlights
Highlights
or lowlights?
I did go to the Planet 13 dispensary, the largest dispensary in the world. Hey, look, I was there very late though, so I don't think I got the full experience because a lot of things weren't open, but they had the main floor that was open. That was very cool. Definitely a highlight, although I wasn't really in the mood to be there anyway. It was, like I said, it was very late, but that was cool just to see that. What else was a highlight?
Did you play any?
I did win some money. I won about $300.
Wow.
Playing a variety of craps, pie gow, a lot of pie gow, and blackjack. Oh, I had a weird thing happen to me. This is a first. If you've ever gambled, you know when you enter the game, you put your money on the table. Dealer takes it. Dealer counts it. Dealer gives you chips. Right. I was sitting down at this blackjack table. I was by myself. I was the only person there, and I was doing very well. And this other guy sat down, throws down 5 bills. Dealer takes it. Dealer counts it. Dealer gives $100 worth of chips, and he's like, "Those weren't 20s, those were hundreds." She's like, "Are you sure?" He's like, "Yeah." So we had to pause.
Did they ask you?
No, I wasn't paying attention. I had no idea. so she had to call the pit boss over. So we had to literally pause, and we paused for like 15 minutes while they and we weren't allowed to play because they had to go through the security footage because I guess you can't play because they can't record you while they're going backwards to look, right? So I just sat there on my phone for 15 minutes waiting for like them to say is the guy who's lying here, the dealer or the guy? Well, it turns out the guy was correct and the dealer screwed up. So then he just took his chips and he walked away. He didn't even play. That was funny, I thought. Yeah, he put down 500s and she thought they were 520s. No, but it was a good trip. It was nice to see some people. Went to, if you've never been to a Vegas buffet, you haven't lived. They're incredible.
Like at the casinos?
Yeah. Not every hotel has them, but a handful of them do, I believe, and they're fantastic. Yeah. I don't know. That's kind of it. I don't really have too. Yeah, I'm with you. Corporate worker. I understand why he left. I kept playing and I kept winning. JD says the Paris is good. I've been to the Mandalay Bay buffet and we went to the Caesars buffet. Something else I'd forgotten about because I hadn't been to Vegas in like 11 years is these casinos are so big. Like even if you say, oh, like where we're going is right next door, going next door takes 20 minutes. By the time you like actually get outside and then get inside of the next one, because everything is so big. So I like wasn't prepared for the amount of walking we were doing, which is cool. But it was a very good trip. I missed you guys. Oh, and I didn't tell you about the flight thing.
No.
Okay. So yesterday, I'm sure you heard about this. Not yesterday, 2 days ago. You heard about all the flights that were canceled, right?
Sunday.
Yes. Like 12,000 flights were canceled.
Okay.
Okay. Half of my crew, there was 12 of us. Well, I should say there were 13 of us. One guy never even made it because of flights.
Wow, that sucks.
One guy spent all day on Friday it was either O'Hare or Midway, and his flights, he was flying Spirit, kept getting canceled. He went back on Saturday to the other Chicago airport. That was also canceled.
Oh my!
And then he's like, "I'm not coming," which is fine. So of the 12 of us that actually made it, 6 of us had our flights canceled back on Sunday. We were all basically taking the red eye Sunday night, and everybody that was flying to New York or New Jersey, flights canceled. So they had to scramble, and they ended up booking a rental car, driving to LA, spending the night in LA, and then taking a Monday morning flight back home. And I saw the pictures of the rental car line at the airport. It was like half of Vegas was there.
Wow.
Because everybody flying to New York was screwed. So yeah, I didn't fly Spirit, but a lot of people who flew Spirit this weekend had their flights canceled. I flew the other discount airline, Frontier, which is about to be the same company anyway. They did not screw me, thankfully. But it was tense there for a minute. Everybody that I ran into though, every worker, every local, I asked the same question: "Hey, how's business? Is it back to where it was pre-COVID?" And I got unanimous yes. Unanimous. We're as busy as ever. It is like we are fully past COVID. And so that's good, I guess, from a commerce point of view. But that's essentially, I don't really have any good stories from the trip other than the blackjack mishap, but I did pretty well for myself. I played craps for the very first time. I never played craps before.
I have like one time, but I didn't really get it.
Yeah.
So.
So I didn't get it either. I was playing, and I'll be honest, I didn't always understand why I was winning chips, but I accepted it.
That's all that matters.
That's all that matters. I knew what happened. I knew why I lost. I didn't know why I won. But
only if I had
was cool.
fun playing craps when I got to like shoot the dice or whatever.
Yeah, I just stayed long enough to shoot, and then I was done. That's all I wanted to do. Anyway, here's the plan for today's show. We're gonna have Brian Feroldi join us here in a couple of minutes, talk about his new book that is out. That'll be followed by Christian Fromhertz, who will join the show at 12:30 from Tribeca Trade Group. He's also on the road, I believe. Dave Mazza from Direxion will join us at 1 o'clock to talk about trading opportunities in leveraged ETFs for this week or the next few weeks. And that's more or less the plan for the show today. So, the other thing I wanted to mention, last thing about Vegas, and then we'll move on, is I went to my first Vegas pool party.
Okay.
You ever been to one of those?
No, I've never been to Vegas.
First off, not really my scene,
Okay.
but it was whatever. I don't really care. But I was unprepared for how strict the rules are at these places.
Really?
Like extremely strict on the dress code.
At the pool parties?
At the pool parties. Like you had to wear like an actual bathing suit. Everybody had to wear like an actual bathing suit. No, like you couldn't bring your bathing suit and change once you're there. You had to be wearing your bathing suit to get in.
Interesting.
So I didn't have one. I had to go buy one. And then they made everyone check their bags, even though there were lockers at the place, which whatever. But it was cool. It was cool. It was just it was a very crowded, very, very crowded, man.
So are you long the Vegas stocks? LVS?
No, well, LVS isn't Vegas anymore, dude. Las Vegas Sands sold their Las Vegas properties.
Well, okay,
so
what other ones? MGM.
Yeah, MGM, Wynn. For whatever it's worth, like I was there during the Final Four, right? But we went to a couple of sports books, and neither of them seemed particularly crowded. We were at a sports book during the Final Four, during the Duke game, and
Does Vegas have mobile
not crowded. Does Vegas have mobile
game?
I know. I'm not sure, honestly. I'm really not sure. But a good trip. We'll of course be back in Vegas in a month and a half, 5 weeks from now, or so, for the FinTwit conference. And that's going to be exciting. It's going to be at the Aria Hotel and Casino. There's a link in the description of this video to learn more and get a discount. But there's only a handful of days left to actually purchase tickets to either the conference itself or the Inner Circle. The Inner Circle is the exclusive, like, Benzinga centric part of the conference. You can use the code that here. I'll just put it on the screen for you right now. The code is BZYouTube20. BZYouTube20. And there's the link also on the screen. Come to Vegas. Come hang out with us. I'll be there. And again, and try not to lose all my money. But it would be definitely fun to meet some people and hang out and not get too sunburned. I will say the weather was fantastic. I would gladly go to Vegas in April again. Last time I was there, it was August, and I would not do that again.
Good to know.
But good to know. Anyway, no, all good. Okay, should we bring on our first guest?
Let's do it, Spencer.
All right, Brian Feroldi, who was on a couple of weeks ago, but a lot has changed since then. He has a book out. Is it out today?
Yep. Today.
It's out today.
Is the
Why
release date, drop date? I don't know what you say for a book. Publish date?
Drop. We can say his book dropped.
Okay.
He dropped his book.
Yeah.
I don't know. Does that?
I don't know.
He didn't drop his book.
I don't know.
Speaking of drop, the title of the book is "Why Do Stocks Go Up, Not Down?" Why do stocks go up? Let's bring Brian on the show and talk about it. Brian, whoa, what's happening to Aaron and I? What's up, Wayne? Welcome to the show.
Hey guys, awesome to be back, and great bump video right there.
There we go. Thank you. Appreciate that. So, today is the drop date. Is the album release date?
Today is the drop date. I like that. Yeah, it's published, it's available, it's shipping. Today is the day when it's released to the wider world.
So is today the day you can actually go to like Barnes and Noble for whoever goes to bookstores and buy it?
I'm not sure about that. I know that most people do their digital shopping these days, and Amazon controls like something crazy, like 90% of the market or something like that. So if people pre-ordered it, I know that it's in the mail to them today.
Nice.
To today, and it should be available, reaching them by Wednesday or Thursday, or depending on a whole bunch of different factors.
Yes.
Brian,
Awesome.
look at this. #1 release in stock market investing. Congrats.
#1. Woo!
So for our audience, you want to just give a quick, 60-second summary of what they can expect to find in this book?
Sure. So this book was really written, aimed at myself, the me that graduated from college almost 20 years ago at this point. I wonder if you guys can relate to this story. I vividly remember being on my first day of my job, right? I was sitting down with HR, filling out the W-4, my health insurance, whatever, and they hand me the papers for like a 401k. Right. And I open up this glossy brochure, and there's basically like 3 options. It's like, do you want the high growth, the medium growth, or the low growth portfolio? And I look at the lady that's like in HR, and I was like, what do I choose? What do I do?
She went, oh,
I'm not allowed to tell you that. You have to figure that out on your own. And I was like, okay, well, this seems like an important decision. I don't know what a 401k is. I don't know what I'm investing in. I don't know why I should have faith that I'm going to be investing in is going to do well over the long term, but people say that in putting money into a 401k is a good thing. So at the time, I literally had zero education about what the stock market is, what a 401k is, why the stock market goes up over time. I literally knew nothing. And I say that as someone that just graduated with a business degree. A business degree, right? Like, can you, like, how many people are in that exact same situation? They're asked to make a decision about their financial future, and they're just provided with zero education about what to do.
Yeah.
So the question I ask myself is, what do I wish I could hand myself at that time to like fill in the education gaps that I wish I had? So this book covers things like, what is the Dow Jones Industrial Average? What is the S&P 500? What is the stock market? Why does it go up and down over the short term? Why does it go up and down over the long term? And my hope is that if you read this book, which is super simple, it's like 60 chapters. They're like 1, 2, or 3 pages each. By the end of it, you have a firm understanding of what the stock market is and a firm grasp about why you should have confidence that it will continue to go up for the rest of your life.
First, I want to give you credit for even opening the 401k brochure, because a lot of people, and I'm not going to name names, a lot of people that I know just threw it on the dining room table, never to be looked at ever again, and not until a year later. Oh yeah, I know I was supposed to do something with that. I don't know what it was. All right, well, we just lost a year, but we just lost a year, but we can hopefully try to get it back by taking some yellow options. Okay, so the book itself, who is it meant for? Like, or I guess I should say, like, who is it meant for? People that like know like nothing, or I guess like if I know some things, will I still learn things?
Yeah. So,
okay.
I've been obsessed with the stock market for 20 years, right? And when I was researching the book, I still learned things about the stock market that I didn't know, and I've handed it to people that I know have been investing for 10 or 15 years, and they learned things that they didn't know. But it's not aimed at people that are the primary target market for this isn't people that know a lot about investing already. This is aimed for people that literally are starting at stage 0, and I want to get them to the point where they know what the stock market is, why, how it works, and how to invest in it over the long term. So I know a lot of people that have read it already. They say, I learned a little something with this book, but I'm going to give this book to my mom, my cousin, my friend, whoever. Like, when people come up to you in real life and they're like, I want to invest, like, what is like the first thing you do? What's the first thing you say to them? Like,
that's so scary. Like, that's so scary.
I would be like, One Up on Wall Street, great book. The Warren Buffett Way, great book. The Motley Fool Investment Guide, great book. All wonderful. There's so many wonderful investing books out there, but I didn't have like here's like step 1, just like here's like the extreme basics. So this book is aimed at people that know absolutely nothing and want to get them to, I know enough.
I will certainly be picking up this book because at the very least, I hope it will arm me with like what to say to the person who asks me that question, right? Like, oh yeah, like you know stocks, you do stocks,
right?
What? And I don't know what to say to that. I have no idea what to say to that. Like when people ask for like my help on things, so I hope I will gladly pick this book up and like you said, if it's a couple of pages a chapter, I could rip through it probably in like a weekend, right?
You could easily read this in a day, like easily.
Nice.
I wrote it to be as simple to read as possible, and it's funny. Like my sister-in-law, she's talked to me about investing, and one of the questions that she had was like I literally don't know what step 1 is.
Yeah,
like I don't even know. Like, what do I go to the bank? Like, what do I do? And it's like, no, step 1 is open a brokerage account. People literally don't know step 1. Like how to invest in the market. Forget about 401k versus Roth versus IRA versus any of that, or what to invest in. It's just like, those are the questions that I kind of wanted to get to.
How long did this process take you, by the way? I've thought about, if I were to write a book, what would I do? But like, how long would it even take? So
I started it in August of 2020.
Okay.
And it's shipping today. So about 18 months start to finish. And as I said, this is a relatively simple book, right? I tried my best to make it as simple, plain language as I could. It still took me about 8 months to write a simple book, and then it took me 9 months to edit like the editing was just so painful. It's so painful. Yeah, so 18 months from inception to shipping is pretty good.
Are you going to be writing any books any more books, or are you gonna put a pause on that for a while?
So I am naturally bad at grammar, spelling. Like I am like writing is like so unnatural for me, given when I'm naturally built for like math. Like math makes sense to me. The English language does not naturally make sense to me. So I in no way growing up was like, I wish I could be an author or a writer. Like this is all anti to what I'm naturally designed to do. So I have no plans to write a second book right now. But if I find a topic that inspires me enough, like this one did, I might. But I have zero plans to write another one right now.
Got it. Good to know. All right, Brian. Well, we'll let you go. I know you've got a busy day, but congratulations on your book release. We put the link in the chat. It's also, I believe, in the description. So everyone go check it out. Brian, thank you for coming on.
Can I, before we go, what is like the biggest takeaway you want people to have
from the book?
Yeah.
I want people to be able to invest with confidence. I want people to know that if putting money into their 401k or putting money into index funds or whatever they're doing now, the true why behind why that works. I equate it to like being on a plane. You can get on a plane and the plane goes up in the air and there's turbulence along the way, but some people just sit in the plane and they're like, fine, like this just works somehow. I've always been the type of person that I like, that makes me nervous. And I'm like, well, I want to understand Newton's laws and I want to understand Bernoulli's principles and the airfoil and how planes actually get up into the air and how they actually work and how gravity works and things like that. So it's arming people with the very basics that they need to know so that they can actually invest in the stock market with confidence.
Yeah. Chat's going, you know what your second book has to be now, right? Your sequel book has to be.
Why does the market go down?
Yes, I'm sure you've heard that. I'm sure you've heard that a dozen times today. Get used to it.
I should have A/B tested it. I should have done 2 titles, right? And been like, what's the market doing today? And that's what I'll go with as the title.
Actually, the selling, the going down one might sell better because everybody likes to read about a crash. So
yeah, that's right. There you go.
All right. Brian Feroldi, thanks for joining us today and congrats on the book.
Thanks so much, guys. Really appreciate being here.
All right.
Have a good one.
All righty. Hey, maybe we should talk about a stock or two at some point today, right? So you want to start with Twitter?
Sure.
Did you talk about it yesterday? I hope you did.
Of course.
So I actually, this is a weird timing thing. I landed in Detroit at like 7:15, 7:30 a.m. yesterday.
Oh, why didn't you come to work?
Why didn't I come into work?
Yeah.
Are you kidding me? I took like 2 naps yesterday. I took the day off because I needed a day to. I'm still not even recovered between the jet lag and just the general lack of sleep. I'm still not really recovered, but I needed the day, man. What can I say? Anyway, what was I saying? Oh yeah, so I landed. So I hop on my phone and I just pull up Twitter to see what's going on. And as I was doing that, the news broke of Elon's stake in Twitter, and I thought, that should be fun to talk about. I wonder what the stock is doing. Oh, it's up 25%. No big deal. Anyway, if you thought that was the last of it, well, you are sorely mistaken. This whole thing is like moving suspiciously fast to me. So yesterday, the filing hits, right? It's a 13G, right? Everyone, correct me if I'm wrong. It's a 13G. It means he's taking a passive stake. Like he's not gonna do anything. He's not gonna call for change, right? It was a 13G. Let me just make sure I got that right. It was pretty sure it was a G. Yeah, it was a 13G. All right, passive stake, no big deal. So that was filed yesterday. So today, they announced that Elon is joining the board. Oh, and as part of that agreement, he is not allowed to ever own more than 14.9% of the company as long as he's on the board. So let's pull up a Twitter chart here. What is it doing today now? So we're up another 3%. That's it? Feels like more than that. All right. Anyway, so yesterday we're up, 25%? Something crazy like that. Today we're up 3%. We're now up from Friday when we closed at $39 or $39.31. We're up now $12, almost $13 from Friday's close. Man, I don't know. Because I was napping yesterday, so I missed what you said. But do you have a take on Elon twittering?
I think I think it'll be interesting to see just exactly which kind of these ideas that Elon's proposed on Twitter that he wants to bring forth to the board.
Like the edit button?
Like the edit button, we saw that. He tweeted that out last night, and even the CEO of Twitter said that that the results of the poll would be. I don't support an edit button on Twitter.
I know, because here's the argument, right? Because it's a news source, right? So
Right.
people will
Can
yeah.
go like back in the fact, and also you get like public statements from
Yes.
elected officials and government leaders and whatnot, not just here in the U.S. but around the world. And then once you open that up to it being something that's able to be edited, I don't know. I just don't think it's great, especially. But then the other things that Elon wants to do, like make the algorithm open source. I mean, I think that's fine.
Jack Dorsey agrees with that, by the way. I think they had a conversation about that a few months ago on Twitter. But you know what this does for me? My first thought when I saw this, remember when I said that my hottest take of the year was that Elon would not be the CEO of Tesla?
Yep.
By the end of the year.
Yep.
This supports that.
Yeah, I think it does.
He clearly wants to do other things. He's got the Boring Company. He's got SpaceX. He's got flamethrowers. And now he's on the board of Twitter. Okay? I still believe, as strongly as I ever have, Elon Musk, by the end of this calendar year, will not be the CEO of Tesla. Tesla, for whatever reason, Tesla spiked yesterday because they had deliveries, right, over the weekend.
Yeah, we also talked about that, and that the deliveries may not be what they seem because Tesla seems to have changed how they classify deliveries from last quarter to Q1.
You mean that they constantly change how they define things? That's been true for their accounting for years.
Yeah, it's just some more creative accounting. From
creative accounting. Anyway, back to Twitter here. I'm for the edit button, although I agree that it's easier said than done, and how they have to do it in a smart way that makes it so that people can't just like change news. I don't know the answer. Honestly, I don't. Maybe Elon can help us figure it out. But Twitter, man, has been plagued. It underperformed for a long time. Let's go back to the history. Let's go back to the IPO. It opened on day one at $59.11. We're still $8 below the opening tick in Twitter. I was listening to a podcast I listened to called Business Breakdowns. They did an episode about Twitter on Twitter about a month or so ago, and the biggest thing, my biggest takeaways, apparently Twitter's technology stack was tremendously outdated. And remember how Jack left and came back?
Yep.
When Jack came back, whenever that was, like 2016, I think, when he came back, basically spent the first like 2 years getting Twitter's tech stack to like fit modern standards. And I'm not savvy enough to explain really what that means, but essentially their code base was built in a way where it wasn't built with like in blocks where you can just like build one block on top of another. It was built so like one change could affect like everything, and like a Jenga tower, right? So they seem to have gotten that behind them, which is good. Twitter still has an opportunity, right? Like, here is the bull case for Twitter, right? The bull case for Twitter is that they've got the technology stack figured out, and now because of that, they're able to experiment and try more stuff at a much faster rate. If you were on Twitter in 2012 and left the platform for 8 years and came back a couple years ago, you would see your first reaction will probably be, oh wow, it looks kind of the same, right? Because it more or less is the same, right? Like what's the biggest change Twitter has made to its product in the last half dozen years? Probably, or I guess I would say Spaces,
Probably.
and I would say they made tweets longer, right? Those are the two big innovations that Twitter's made. But anyway, what I'm getting at though is if you just look at the last year, the rate of innovation has rapidly increased. The rate of experimentation. They've tried so much more stuff in the last year than they did in the previous 3-4 years, right? Spaces, they had the fleets. Thank you. They had fleets, which tried and didn't work, but hey, at least they tried it. They're doing Twitter Blue now. They're throwing stuff at the wall and seeing what sticks, and that's what you want to see, right? That's what you want to see from a company. So that's the bull case, right? Is they're experimenting faster, they're moving faster, and eventually they will find some new thing, right? That works. And like for years, I think like the joke about Twitter is that they've been the clown car in the gold mine because they don't really, and that's not for me. I think Zuckerberg said that. Just because they're sitting on all this user engagement and data that they have not done a great job of really monetizing. And so the bear case is that they will continue to fail at that, right? That's the bear case. If you look at their monetization growth, their ARPU, right, their average revenue per user, and compare it to the ARPUs of Facebook and Snapchat and Pinterest, it has not kept up. So it's been a bit of an enigma, right? Because it has become a verb. It has become a very important part of many people's lives. People rely on Twitter, and yet, as a business, as an investment, at least, it hasn't worked for a lot of people. So is Elon the answer? I don't think so, honestly.
Yeah, I do think, like I said, that making the algorithm an open source code would be good for all of us because it'll finally give us some insight in just how Twitter is kind of determining what we see and what we don't see. If I had to guess, I assume it's just based off the types of tweets we stay on or interact with, that they'll try to give us more tweets like that. I don't think it'll be anything nefarious, but hopefully that would then put pressure on the other social media companies, Facebook, Google, TikTok, to put out their algorithms as well. If Twitter's really does become open source code, but you got to imagine here that Twitter's legal team and whatnot will step in and try to stop some of these things because there's a reason that they're not, that's not the way they are right now.
Yeah. Twitter, if anything, Twitter's been defined more for its failures. Like Twitter bought Vine, or did they buy Vine, or did they develop Vine? Either way, they had a Vine, which was the precursor to TikTok, and they shuttered that. And here comes TikTok, which is more or less the same product, just a way better algorithm and more editing tools. And TikTok is blown up. And so why couldn't Vine have been that? I don't know. It's easy for me to question these things because I'm not in the room where it happens.
It's the same
right?
thing with like Skype and Zoom.
Sure. Definitely. I've been a fan of Twitter. I've been on Twitter since 2009. I've been on Twitter for 13 years, right? I love the service. I'm addicted to Twitter. I was on Twitter this weekend when I'm on vacation. I'm still on Twitter. I'm on Twitter all the time. I love Twitter. I want to see it do well. Although I don't necessarily know if Elon Musk joining the board is going to move the needle. The other thing I'm seeing, the speculation is Elon Musk is going to eventually do something to bring in his own CEO, his own handpicked CEO, whoever that would be. I don't know. It just creates a wild card here. Are there any synergies with Twitter and Tesla?
No,
No.
I don't know. I think Twitter here, if you liked it long before this, then I mean, obviously, when a stock's up 25, 30% in 2 days, it can be due for a drawdown. But when looking at the overall chart, I mean, look, we were up in the 70s, not less than 12 months ago. So, I don't know. Like I said, if you liked Twitter before, I'd still say, stay long Twitter.
If you were long Twitter, if you by sheer coincidence were long Twitter, like you bought it a couple weeks ago or whatever, right? And you were long into yesterday or into today, I would definitely consider taking some profits. Like if you're long for like a swing trade, if you bought the stock last week and you hadn't sold, you should sell. That's what I would do. Let's go to a daily here. All right. We are near the low of the day, right, on Twitter. I would this is a gift. This is the gifts of gifts. Not to say it can't go higher, but come on. When your stock goes from 39 to 51 in 2 days, take the gift. How high did it get today? You got to 54. Take the gift. At least please take some profits. Yeah. Twitter at this point, really what it comes down to is it is a show. It's a show me story. They have to prove that they can turn it around. And if they can, it'll be an all-timer because the stock has been sort of like the bane of Wall Street for the last 6 years. Really? I mean, February 2021 notwithstanding. Sort of been the bane of Wall Street's existence. It was such a high-flying, sexy. It's been the exact opposite of Meta, right? I mean, here, you know what? Let's even pull up Pinterest and Snapchat. Pinterest, Snap. Let's just compare them all. All right, that's not going to work. What the heck? My charts are all messed up. Hold on. Let's fix this. There's Twitter. There's Snapchat. There's Facebook. And here's Pinterest. What the heck? All right, Pinterest is mucking with my chart here. Still, though. Let's go back in an all-time chart. Twitter is lagging. It's down 19% in its history. Snapchat's up 70%. Facebook's up 272%.
Yeah, so, I mean, Facebook, we've talked about this before, but Facebook had a similar problem back in the day where they had the users and they just couldn't figure out the best way to monetize its users, and eventually they figured it out, and the stock did really well, and it did really well for a long time until it didn't anymore.
Wait, can I tell you the best tweet? I'm gonna have to paraphrase it, but the best tweet that I saw, and I don't remember exactly what it was. It was Elon Musk is acquiring the raw materials for his company.
Oh, that's good.
I thought that was very good. That was a very good tweet.
It was also funny going back. He had tweeted like "seize the memes of production" like 2 weeks ago, and then now someone like quote tweeted it and said like Elon really seized the memes.
Can you imagine? I know he's on the board now, so it's really out of the question. But can you imagine if Elon had just like sold into yesterday's pop?
I think there's a holding period.
Is there? I don't honestly know.
I believe so.
Like theoretically, he's allowed to sell whenever he wants, right? Like obviously he didn't sell yesterday, right? That would be insane if he did, but he could if he wanted to. He just made a quick couple. How much did he make? What, he bought 9% of the company?
Yeah,
and it went up $10 yesterday.
Yeah, I mean it's the same thing when we talked about with when Ryan Cohen bought Bed Bath & Beyond. If he were to sell it,
you only get one shot.
Yeah,
you only get one shot.
But he was always, I mean, Elon's intentions with this were always to have some influence to make something happen at Twitter. You know, a la Carl Icahn, like an activist investor, come in and shake things up. I don't know. I mean, I doubt he tries to get a new CEO, unless for whatever reason the current CEO like really stands in his way on a lot of things that Elon wants to see possible or see happen.
Yeah.
Yeah, I saw that on Twitter too. Elon with today's price action officially has unrealized $1 billion gain.
Made $1 billion. Must be nice to make $1 billion in one day. Can I bomb the charger off you?
Yeah.
Thank you. All right, that's probably enough Twitter conversation for today until there's another headline tomorrow, right? And we can talk about it then.
I want to talk about some Chinese stocks here because things are getting.
I haven't seen that today.
I'm not gonna say things are getting bad in China because I don't know. I don't know. I'm not there. I don't know all the specifics.
Yeah.
We do know that China is as far as compared to the U.S. More willing to enact like quick and sweeping lockdowns to limit the spread of COVID.
Wait, is there news today? Oh, you're talking about COVID.
I'm talking about COVID.
Oh,
COVID.
okay.
So Shanghai is like full lockdown. Things are getting bad. I didn't know this, but China doesn't have the vaccines that we have. They had their own vaccines, and I guess they aren't mRNA vaccines. And so now, just now, they're saying, all right, let's try to roll out this mRNA vaccine.
They have Sputnik.
I don't know.
They have the Russian vaccine.
No, I don't think so. I think they have their own, but I
Okay.
don't think it's mRNA.
Okay.
But here,
I didn't realize you were talking about COVID. I thought you were talking about the regulatory stuff.
No.
Okay.
Regulatory, we're good. They're just playing friendly on the regulatory side. But,
Okay, but we're not good on COVID.
No, not. Well, and again, like I'm not. I don't know. Like I don't know if it's more of just China playing their government playing better safe than sorry. In what they're doing as far as enacting restrictions. Yeah, they have Sinovac. They made it. Oh, you guys have the same vaccine in the Philippines. Is it so is it not mRNA? Is that the deal? Because I saw this headline from Reuters today saying that this one vaccine they're looking at is cleared by their like FDA, I guess. CanSino Bio's mRNA vaccine candidate cleared for trials. So they're just now looking at like, oh wow, like maybe we should use some of these mRNA vaccines. So hopefully, we're not still talking about China or COVID in China in a few weeks. But this is just not good news for supply chain, for inflation, for the people in China.
I mean, I've been seeing the Twitter threads about obviously the lockdown it's terrible to be in a lockdown like that, and China did this the first time around. I guess I didn't realize I know that lockdowns are still in effect. I didn't realize that. Are there no more of them, or is it just?
Oh yeah, it's like actively they're like Shanghai. They just shut down today for like a week.
I didn't know this.
The cases are here. I'm just on Google right here. This is over the last 30 days.
Coronavirus
cases.
Do we know if it's like? Is this like the
good COVID, bad COVID?
No. Is this like Omicron? Do we know what variant? Is it a new variant?
So there are a lot of asymptomatic cases, but that's also because they're testing like everyone. So they're testing, but yeah, they're popping up like, I mean, here, let's just go to.
Man.
Yeah. And I feel like, honestly, this would be, this is from today. Whole of Shanghai enters
Holy
COVID
moly.
lockdown despite lower symptomatic cases. So,
okay.
And I feel like this is kind of getting like, not swept under the rug, but people aren't really talking about it on CNN, CNBC, or anything because obviously Russia, Ukraine, other economic news here in the U.S. But I'm just saying, like, I know that China is going to want to play. They have no problem shutting down and sending everyone what they need at home, and that people don't have to go to work and stuff. And so if that happens, that's where we do a lot of our production. That's where a lot of our manufactured goods come from. So it's not good news for supply chain, for inflation. So let's keep watching this.
Yeah. Wow. I didn't. What video is that?
I don't know. It's just on Reuters.
Okay. Okay. So wait, going back to this, if I can, where's my pro chart? There it is. If I can go back to the chart here. So FXI today, we're down 2.5%. Let's go stock specific here. BABA's down 5% today. Now I know it's we're really only down to where we were a couple days ago, but I didn't have this on my radar until you just mentioned it. I thought we were talking about the regulatory stuff because I saw a headline over the weekend that um whatever China's regulatory body or central bank or whomever is going to change the rules to make it so that US auditors can get into the books of Chinese companies, which is all that's all we've been asking for. That's all the US regulators have been asking for is let us audit your companies.
Yeah,
right.
Yeah, I think all the regulatory stuff is good news. It seems like they're setting.
So
up to play next.
so like delisting for the moment off the table, right? Like there was all those threats, like DD. Speaking of DD, how was DD doing? DD being delisted, right? Oh wow, it's getting back almost all those gains from this pop was when the PBOC, the central bank over there came out and said that they were going to play nice. That's what that pop was on March 18th. Getting back almost all those gains. Yo, DD has been like the rug pull of rug pulls. I don't know if I've seen an IPO do worse than DD. I really don't. Because it's not just the drawdown. It's the speed of the drawdown, right? Like this thing IPO'd in June. And it took 8 months to get below $1? I don't know the IPO price, but it opened at 16. It's like 8 months to go from 16 to less than $1. That's insane. Just the speed with which that happened. Anyway, you don't have any active positions on for China, do you? Like BABA calls or anything like that?
I actually have some short dated BABA puts, but then I also
BABA puts. Okay.
Yeah.
Let's pull up KWeb here. This is the ETF. It's quiet. You know what? Let's do this. Let's go to my favorite site, etfdb.com, that I pay for. Oh, can't do it. They're under maintenance. Let's find a different site. Let's look at the fund flows here. I'm just really curious what the flows have been into KWeb the past couple of weeks. Let's just go back to the last month. And let's just see what the flows have been like into KWeb, because that can tell me how bullish people are. So in the last 30 days, wow, $245 million of inflows, of net buying activity into KWeb in the last month. A lot of people, although a lot of that happened on the 18th, right? Which was that day that the central bank said they're going to play nice. So a lot of buying activity, buying pressure into Chinese stocks in the last month. That's very interesting. I'm still hands off. I can't do it. I can't do it. No, I'm not changing my take on that. I can't. Too many unknowns. Can't do it. Can't buy any Chinese stock now. Am I going to miss some violent up moves? Sure. Yep. I already missed a couple. Look at KWeb. Went from 20 to 30 in like 2 days. Oh well. But it's just too many unknowns for me. So, I also wanted to look at. So you wanted to look at China. I wanted to look at some of the trending stocks of the day besides Twitter, right? Have you seen this SBFM?
No. You know what I have seen though?
What?
Dogecoin.
All right.
We're gonna take Dogecoin to.
First off.
Take this crypto.
What is that?
$1.
No. I remember him singing it. I don't know what it's from though.
We're gonna take Dogecoin.
All right, fine.
Can I play it?
If you want.
I found it. I'm so good at
you found it.
Googling things.
Do you want to play it for us on the stream? All right, he's gonna play it for us.
I need to. Wait, can you guys hear it?
I heard it through your.
Making this crypto mean $1 soon. I'm hoping it's safe. We can assume.
You weren't listening to it?
No, I can hear it.
How?
'Cause I have good ears, man.
You might have studied the economy for 7 years in college, but no one guessed that Bitcoin would be $30,000.
Oh, quantum. That's a really good point, too.
Basically anything can happen at this point, too.
Yeah.
We're
But
gonna
quantum,
take
I think that's
Dogecoin
off the table.
to the moon.
You're saying one thing at the end of this.
Making this crypto mean $1 soon. I'm hoping it's safe, we can assume. Don't actually assume this. We're taking Dogecoin to the moon. We're gonna take Dogecoin
Okay,
to
okay.
the
Stop. No more. No more of that.
Okay.
Wow. All right. Okay, so what was I going to say? SBFM, Sunshine Biopharma. All right. Benzinga, if I'm not mistaken, Benzinga had the exclusive this morning. Yes, we did. 7:30 a.m. Eastern Time. We had the headline on their PR, from their PR. They reported 2 of their newly designed mRNA molecules were effective at destroying cancer cells grown in culture, not in vitro, which is a key difference. Anyway, look at this chart. It kind of speaks for itself. There is some crazy price action here. So if you're buying this stock to buy and hold it, maybe think twice based off the price action. That being said, look at this move today. Let's go to a 1 minute chart. Go to this morning. And what do we see here? When did the move? When did the stock move? Oh, 7:30. When our headline hit. I had the timestamp right here. 7:30. 7:30. Another example of Benzinga Pro paying for itself with one headline. That's all it takes is one trade. You could have bought this thing up at $3 this morning. It's at 5.25 right now. That's the big mover of the day. I'm not going to attempt to analyze this stock at all because the moves are, as you can see, insane. So there is a big trending one of the day. You had it. If you have Benzinga Pro, you had it first. Charlie squawked it. We had the headline in the newsfeed. It was highlighted as red, which means it was hot and exclusive. You had time, is all I'm saying. So there's that. I also wanted to talk about ATER, which appears to be a potential short squeeze candidate these past couple of days. What is the short interest here on ATER? In Benzinga Pro, we have it at 14%, but that number, of course, we know is not in real time. I know there's a lot of speculation that the short interest has gone way up on this stock in the past couple of days. What is the float? The float is 60 million. Kind of small. Definitely not a large float. Kind of small. So it popped off the open today after ripping yesterday. We are getting back some gains though. I would pay more attention to yesterday's close than anything else, right? So if you're long ATER, you want to see this thing hold $3.42, right? That's what you want to see. Is that also the low of the day? No, sorry. Yeah, 342. The low is 330, but you want to see 342. That's what you want to see hold. Anything above that, you're good, I think. If I was long in the stock, which I'm not, but if I was, and it broke below 342, I would get out. If it were me. 342 is your line in the sand. That's your stop. That's how I would approach that trade. What's up, Elite Trading? What's up, Jesse? How you doing? Catching up on the chat. THCA. I missed that one. Who said that? THCA 100x minimum. Did Charlie move that guy today? Charlie moves stocks all the time because he's the best. I didn't see that one, but thank you for the alert. Okay. What else? Yeah, thanks for that, RJ. I thought I thought I had seen that, but I wasn't quite sure, and I didn't want to say anything that's wrong. So there's that. Okay, let's do this. Did you do a crypto update yesterday, Aaron?
No, we did not.
You did not,
Mm-mm.
dude. Why not? Did you do one on Friday? You're
Mm,
killing me, man.
I
Killing
can't
me.
remember that far back. It's been a long weekend.
You're killing me. All right, let's do a crypto update. Let's look at Dogecoin. All right, where's my heat map? There it is. Hey, look at Doge. Look at Doge. Up 15% today. That's the biggest move I think I can remember for Doge in quite some time. Do we have a reason? Aaron, do we know?
That Dogecoin's up?
Yeah.
Peeps are talking about it again. Go on Twitter. Go look on our Parsley data. Readers are interested in Dogecoin again.
Yeah, but do we know why is my question.
I don't know.
We don't know. Okay. So Dogecoin is trending because. That's cool, I guess. What else we have here? Luna up 5%. Near Protocol up 6%. More or less green on the screen. That's cool. Anything jump out to anyone here in the chat? Nothing really jumps out to me besides Doge. Elon? Yeah, man. What is Elon going to make Dogecoin like the official currency of Twitter?
Twitter, yeah.
I don't know. Makes no sense.
Yeah, man. I'm trying to see what else the peeps are talking about. Wow, Baba continues. Getting smoked right now. SPY kind of getting smoked too now. Down 0.8%. We're at the low of the day. So yeah, man. I mean, I honestly think that this, and it's always hard, you know. I mean, markets go up and down. The SPY go up 1%, go down 1% all the time. And who's to say exactly why it's down almost a full percent right now? I'd say at least part of it is because of these fears about what we're seeing in China with COVID and whatnot. And if they go full lockdown, say for a month, right? What does that mean in terms of production? What does that mean for us?
Yep. I don't know. I just want to remind you all that if you want some free Bitcoin, it's very easy to get free Bitcoin. It's so easy. Go to Voyager, download the app, use the sign-up code ZING, Z-I-N-G, fund your account with $100, make a trade. They will send you $50 in Bitcoin just for using that code is Z-I-N-G. Okay, something else I want to do before we bring on our next guest. I see him here right now. Actually, you know what? No, let's just wait. We'll do it after. Our next guest is Christian Fromhertz from Tribeca Trade Group, who's going to join us today with audio only because he's traveling. I'm going to take a guess where he is. I think he's in Florida. I'm going to guess he's in Florida. But
Okay.
I don't know. I don't know why I'm guessing that. I don't even know. I haven't spoken to him at all. Let's find out. Christian Fromhertz from Tribeca Trade Group. Let's bring him on the show. Christian.
That's a good guess, Spencer. Very nice. Very well played there. Very nice.
I was correct. Where in Florida are you?
I am in Florida. Yes. So yes, thank you. I can share the screen. We can go over some charts.
Yeah. Wait. Why don't you just turn your camera off real fast on the settings there down there? So you just click stop cam so we can. Wait. Unless you did that already.
I think it's off. Yeah, it is.
Okay.
It is
okay.
off.
Okay.
Yep.
All right. Cool. Okay. Yeah. Bring up your charts here, and I'm going to.
How you guys doing today?
We're doing good. We're doing good, man. So wait, where in Florida are you? You're in. Did you say
Sarasota.
Sarasota. Are you there for spring training?
I'm spring break. You know, back in. No, I'm just kidding. I'm just on vacation for a couple days.
Okay.
That's all.
Sarasota's cool. Yeah. I mean, I just got back from Vegas, so I'm like only half here mentally and physically.
So what happened with your Vegas trip? You had some issues coming back?
No, not me, thankfully. I mean, I feel like I'm definitely due for some terrible karma because I was like the only person, not the only person, but I felt like I was the only person that was not adversely affected by the chaos of the weekend flight cancellations, and I felt so bad because like half of my group was frantically, like half of Vegas was frantically trying to like get out of town. Like the prices on these flights that, you know, we looked at,
Right.
people were like looking at flights out of LAX, out of San Francisco, out of driving to Phoenix, driving to Salt Lake City, like wherever you got to go, get to where you got to go. And they were, of course they know, right? Like the airlines all know when flights are in high demand. So the tickets are going up and up and up. And I'm sitting over there like, all right, where should I go for dinner tonight? Like, I don't have any.
What caused the delay? Was it bad weather or just busy?
Well, you know, they always blame the weather and then they always blame technology. What I suspect is it was like a labor shortage issue. I suspect that they're having a really hard time. This is totally unfounded, but I just think they're having a hard time staffing flights.
I
Right,
think so
between-
too. Yeah. And it's the demand. I mean, it's the demand too of people going. It is around spring break time, so people are getting away. I could tell you my quick experience, and then of course we'll talk markets and so forth. But I do find it interesting trying to travel because I flew out of Newark Airport, which is in New Jersey. You know, which is, if you're from if you're around the New York City area, you either fly out of 3 different airports, none of which are really good airports. You've got Newark, LaGuardia, and you've got JFK. So it's kind of, you know, pick your pick your poison in terms of those 3 airports. But the airport was so packed, it was insane. And of course the flight was delayed. So every step along the way was met with some type of something didn't go normal. Right. So we get into the airport, Sarasota, and there's no gate. So we're waiting, and you know, that's getting around like it's 9 o'clock at night. It's not early, and they don't have a gate for us. And then when we do, you know, I've got my reservation on Avis, and you know, it's usually, you don't even usually have to go to like a kiosk or anything. You usually go right to the car, you know, and they tell you the names on the board or whatever. It's easy process. Well, they don't have that at this airport, and I go up to the counter, and there's a line of like 150 people.
Yeah.
And so it's a combination, just as you said, like things are busy, but they're also short staffed. Like there was only 2 people who were dealing with all these people. So each person at the counter, and I'm like, guys, I'm like, I don't understand are you like trying to pick out a car? What's happening? Have you not signed up for insurance? Because I'm like, it shouldn't take 10 minutes per customer. So I got up there and I'm very quick. Like I'm, you know, I was probably up at the counter for maybe a minute and a half and out. And I'm like, what are these people doing? But, you know, I was making a decision. I'm like, you know, maybe I take an and come back, but just craziness because of the combination of demand and
I'm trying to find a picture. Oh, I have the picture. I'm trying to figure out how to share it right now on this show. A picture that I got sent from my friends who went to the airport to rent a car to drive to LA to Los Angeles. And it looked like the line. I mean, they were there for probably three hours. They were online, I think, for 3 hours.
Well, that's the thing that was scary, was that you talk to people online and they're like, yeah, we've been waiting for a couple of hours. So you know you're doomed.
Yeah, totally.
So but I do find it interesting that, you know, as much as we've heard about like as much as we heard about the possibility of a recession coming, you know, we did get some economics that came out today, and I thought that they were pretty good. You got the ISM services number, right? That was very strong. And it's funny because I thought, hey, maybe that might have a hiccup, and that might be why the market could be heavy today. But it's funny how this market just gives you, you know, a curveball. Sometimes you've got the feeling, right? Wow, look at that. You've got the feeling right for why there could be a move, but sometimes it's the wrong catalyst, as we get, you know, more Fed speakers today. You know.
Okay, yeah. So wait, I got to admit, I'm a little bit behind the curve here. So I know we had Brainerd who was speaking earlier, and what was said out of that? I saw some comments about the need for balance sheet runoff, right? Am I right?
Winding down the balance sheet quickly was what kind of caught the markets. But they were already like, I didn't like how the market kind of came out of the gate. Like, and if you look at the semiconductors, which I think a lot of people noticed last week, as well as the transports getting hit hard, they had a very small move. They were not leading yesterday. They didn't really kind of recover too much. So, yeah, I mean, we continue to have problem areas in this market, which one of them is the can you can see my screen okay or
Oh yeah, sorry. Now I can. Yep.
okay, good. All right, so yeah, you could I mean, we're falling 4% in the semis. So the chart doesn't look horrible, but it's not good in terms of like the semis. I always want to see leading the market. I get a good feeling when I see the semis acting really well, and I think a lot of people do. Right? There's been some comparison to, hey, maybe the semis are kind of the new transports, but regardless of which one you choose, the transports are not giving that love and feeling either. They're down another 2.4%. And look at the volume, by the way, in the transports ETF is that has been seeing some selling pressure. So I think with this market, and we'll go through some more charts and so forth, but you can't get too bullish, and I don't think you can get really too bearish either. You got to stay somewhere like in the middle. And as strong as things were yesterday, and I really liked a lot of the moves. I liked the growth participating. Growth really outperformed, but once again, you go back to one day is not a trend. And so it's difficult to not get excited about yesterday's price action. But we did kind of get ourselves back into this resistance, which is the 200-day moving average in the Qs. And on the weekly chart, if I can get the weekly chart to come up, we're into this resistance. So this would be this is a great level to watch, which is 369 in the Qs. And we've now tagged that area a couple times this year and have had some difficulty. So as you can see with the market down, with Qs down 2%, they are having difficulty with that. And we're actually seeing a lot of positioning in the Qs 480s, I think. Sorry, let's see. I'm sorry, I get the strike wrong. But in any event, there's a lot of Qs puts going up today. So I'm not sure if that's also due to the 350, and I was way off. 350 and 345 seen a ton of volume on the put side in the Qs. So we'll see where we close for the day. But you could see this 1 hour chart. I definitely like to look for important levels on multiple time frames. So I mentioned the 369 on the resistance side, and for the week, so shorter term, I'm watching this 362 level. So of course, we'll see how that goes because we're kind of oversold now on the 1 hour chart using the RSI. So we'll see if we can kind of hold in here. But it's if you're confused with this price action, then welcome to 2022, because it is certainly, there's been a lot of curveballs, and it's just, I don't think it's going to be an easy year. And I don't think that you can get complacent to say, okay, hey, now we've got a trend going, and especially like in the growth areas of the market. I think you got to take a lot of profits when we've got a day where we rip, and then of course on a day like this, maybe you could do a little bit of buying the dip too.
So okay, where are you looking right now? Because we've talked about. Actually, no. Let's go here. Let's look at the banks. All right, because the banks are just continuing.
Yeah, they're another area.
Yeah. Right. It's for a minute there. I don't know if this is still the case, but for a minute there, the financials were green for the year. I don't know if that's still the case.
They're just very sideways. I can't find a trade in this group. I go over a lot of the key sectors.
Yeah.
That was XLF. So you got a little bit of a mix, of course, what's in XLF. You got some insurance companies which are doing better. But the banks, when you look at the KBE banking ETF, this is not an area that I'm really finding anything that I want to really participate in. It's just too difficult. When I see sideways like this, I just think it's nice being an active trader, right? You could just say, hey, this is not an area to really be in. And again, that could be forecasting, something in the future in terms of loan rates or some other problem that just hasn't materialized that we know of yet, that's just saying, hey, these banks just don't look like they're a good trade. They don't look horrible either, but I just think that it's something to monitor, just to kind of say, hey, what's going on here? But I don't see a trade on either side of the market here other than maybe fading strength.
Christian, we are, believe it or not, only like a week and a half out now from the start of earnings season. We will get the banks. We'll get the banks in the back half of next week, and then the week after that is really when things really pick up with Netflix and all that jazz. Do you have any pre-earnings trades for us in this sort of? This is probably one of this 2 week period that we're in here is just a kind of like the calm before the storm here, just in terms of news flow. You have anything you're watching for the next few weeks? I know some people like to trade a lot of the earnings stocks in the weeks leading up to their reports, which we're in right now. So do you have anything on your radar there?
I think some of the FANG stocks are acting okay. Microsoft, which I am long Microsoft. I got long Microsoft last week. This made a very nice move from the lows. Double bottom or even maybe triple bottom here. But I like the longer term chart. So if you look at the weekly chart in Microsoft, notice, the previous chart that I was showing with the Qs, we were at resistance. This is broken through. So this is a name that'll probably sit long into their earnings date, as long as it kind of acts constructive. Also, I think an Amazon is kind of interesting here. If it can hold in, again, a lot of consolidation around the 200-day moving average. But usually I am, looking at like the FANG stocks going into, or a couple of the FANG stocks because these things love to run into their earnings report. Whether or not they have a great earnings report is another thing. I think that this earnings cycle is going to be very interesting to see what names are going to be doing well and can kind of weather the storm in terms of, the inflation, the supply chain, all kinds of different things there. And if some of their consumers are seeing, weakness and so forth, which could affect them. But I think that you're going to find a couple names that do fine, and then there's going to be a couple names that do not so good. And I think also what this market likes right now is like cheaper names, right? There's still like a tendency towards cheaper valuation names. One name that I think is doing pretty nicely today, and I like this group. I think the cyber group is, there's gonna continue to be these cyber attacks, but Checkpoint Software is having a nice day today. It's a little bit cheaper than some of the, than the Zscaler and the CrowdStrike, which up until recently has been doing okay, but I like this. I'm also long some Palo Alto, which I like the trend going on in Palo Alto. It's not having such a good day today, but as long as it holds 608, I'll try to stick in this trade. And then another area that I'm watching too, which is not related to your question, but I just wanted to throw out there, is Biotech. I kind of think that the lows might be in for the year for Biotech.
So are you just looking at XBI? What are you looking at?
Yeah, I'm not like a specialist in the healthcare biotech, so I get a little bit wary, queasy because of some of these names that will have a drug study and the name drops, because they missed some drug study that you weren't even aware of. So I like playing the whole ETF, and it certainly moves decently. So a couple things that I noted this weekend as I was kind of going through charts, and Tribeca Trade Group, we do some member videos where we talk about like what sector kind of might be interesting. But right. I like when this made a new low, right? This had an RSI bullish divergence, right? So it didn't make the RSI did not make a new low. And you can kind of see that it's making somewhat of a maybe an abstract inverted head and shoulders, left shoulder, head, maybe a right shoulder in here. And it's down a little bit. It's down 2% today. But I think, as long as it stays for me above 92.30, I think that we could see a move to 99. And then, that's where I'll be scaling out and then kind of looking for some other things here. But, if I zoom out here a little bit, this biotech has been going down for a while, right?
It's been terrible.
And yeah, I mean, and I know that you guys talk about this on your morning show, but I'm not one after going after stocks in downtrends. I like to wait for them to kind of base out a little bit. And that's what I think is going on here. So this is a counter trend trade because it's below the 200-day moving average, but I like the upside potential for a trade in the biotech. And you're also starting to see, like the last couple of days, I've been starting to see more biotech names come up on my scanner, which I think is a good sign too for the group. So we'll have to obviously get through today and today's volatility, but I think this could be a group that might see some positive action for maybe the second quarter, maybe even the third quarter too.
Let me see if there's anything from the chat here. No,
but I'd love to
nothing
see
really.
that. I love to see groups starting to act a little bit differently, especially after like a big drawdown that this group has had. This was one of the first groups that started to go down, and sometimes I do think biotech leads. So yeah, I'm interested in this group, and I've got a couple of positions on.
Oh, like what?
I've got XP. I actually have this on, and
Okay.
a couple of names that I actually threw on some CRISPR. Right, probably a
Hey,
name that you haven't heard in a while. Now it's down a bit today, but again, if you kind of zoom in and look at this pattern, so same thing going on the new low. The RSI did not make a new low, and it's kind of coming out here, right? NBIX was another name too. I don't have this one on, but just to see, it's still positive for the day, but it's quietly been just grinding higher. Above the 200-day moving average. Another name that I was looking at was CLDX, and these are pretty in the weeds biotech names, but you could see the pattern is kind of similar. Kind of carving out a bottom, double bottom in here, maybe going to move up to 38 would be a price target that I would be looking for.
Speaking of CRISPR is a Kathy name. We were talking about the growth value trade earlier this morning, and just looking at ARKK for the last couple of days and using that as a proxy for whatever. And it had a really good day yesterday. And of course, as you said earlier, one day does not make a trend. Today clearly is a different story. So I think you have the combination. It's two things, right? It's one, it's the giving back of yesterday's gains, and that happened earlier. But then now you got this other headline here. Brainerd is talking about, like we discussed, the balance sheet runoff, and the market apparently is unprepared for that headline. I don't know what they what
I don't know either.
People asking why we're going down here beats the heck out of me. I mean, it's not as if these Fed presidents are saying anything that like we didn't already know.
Exactly.
So, but anyway, on a day where the market's going to go down like this, ARK is going to lead the pack. So ARK is down 5.5%.
Well, I love what you said. It's a proxy for whatever.
Yeah, I mean, I don't.
Might use that, Spencer. That's really good.
I don't know.
But it's true. But this goes back to the intraday volatility, right? I think this was up like 4.5% yesterday, and it's down 5.3% today. So you kind of have to just take it for what it is right now, and just realize that when you see. And the other thing is that so you could say, because people are always looking for the reason, but also look at what TLT is doing today. Right, it's a pretty decent move in interest rates today, right? So this is down 2.2%, and that's just not going to be great for the let me get the phrase right again. The whatever proxy.
Yeah. It's a proxy for whatever. Matt Whitmore is asking to talk about today's volatility. Can you just pull up the VIX briefly, Christian? Because like volatility has been going down. Let's be clear about that, right? It has been going down. It's stopped going down for like a week now, but I mean the trend speaks for itself. Volatility, things had been getting quieter. Now we're seeing some intraday, choppiness today, obviously. But in the grand scheme of things, has the last couple of days or week or so, with a bottoming VIX, has that have you seen any changes in terms of just like your activity and even just your P&L and what you're able to do in these last few
I mean,
these
I,
last
I
weeks?
think I think that this is a good proxy. I think it's good to watch and realize that we've gone down, from middle of March. It's a great question, by the way.
Yeah.
So the middle of March, obviously, we've seen this big VIX crush. But
Yeah.
again, we're this year. There's gonna be a lot of potholes. There's gonna be a lot of bumps in the road. So to see this VIX drop down like it did yesterday to almost like below 18.
Yeah.
Again, you just have to realize, like, do you think the VIX is going to go down to 14? I think it's probably going to stay around this 18 to 23 range, because you're going to have the Fed raise interest rates a few times this year, at least a few times from what they say. And you've got a war going on. You've got a number of other things going on too. So it's just one of those things where you just can't get complacent with this market and say, okay, we're just going to go up now. I mean, and just forget about all those concerns. Just like yesterday, it was such a strong day for growth. But I think that you just have to keep that in the back of your mind, how you're going to be positioned. And I think it's smart to sell the rip a little bit and have go a little bit back into cash. Again, not going like huge into cash, but like,
Yeah.
hey, forcing yourself to take off a couple trades so that you're not getting one of the phrases that I use all the time is, don't get over the tips of your skis in terms of risk. That's this year is not for that. And if I haven't said the word enough, but don't be complacent in this market. There's too many things going on. Right. So if you can be a nimble trader and say, hey, I wasn't expecting the market to go up as much as it was yesterday, then if that's a head scratcher to you, then maybe you take some profits. To be honest, I wasn't expecting the market to go up as much as it did yesterday. Wasn't really expecting it to go down as much today either. So,
I mean, I wasn't expecting the market to go up as much as it did the last 2 weeks, 3 weeks.
Right.
Forget yesterday. I mean, basically. All right. When was the
Agreed?
Well, let's just even say since March 14th. So, the 2 weeks following that was a Monday, right? The 14th. So, yeah, I think it was. I don't even know, but I mean, it was a pretty rip roaring rally. And so I wasn't expecting that either, but. Today seems to be actually a pretty straightforward day if you look at what's up and what's down, right? Because you see all of tech is down, almost all of it is down, and staples are up, right? Defensive,
it's the defensives today.
Healthcare, Berkshire's up, utilities. It's a pretty straightforward day as far as just the price action is concerned for the moment, which I guess is cool. It means it's easy to understand, right? So.
It is, and like I said, a couple of those things that I mentioned in the beginning just kind of stick out like a sore thumb: the semiconductors and the transport. So, even if you're not big in these areas, use them as proxies for this market right now, and just realize that, the semis should be telling you something. If the semis down 4%, the transport's down, it should tell you that keep a cash balance for the volatile days like this, so that you're not caught off guard, because this is something that I think that you guys talk about in your morning show. It's really impossible to figure out, to predict like what's going to happen on a day-to-day situation. Like we just said, market was up huge yesterday, it's down big today, and there's not really anything that I think you just mentioned. Like, did we, Brainerd talking, we've had Fed speakers every day since the last Fed meeting. So they're communicating, they're trying to be as transparent as possible, saying, hey, probably 50 basis points on May 4th. And they're going to be, today was the first time that we really heard about the balance sheet. So I guess maybe that was a little bit of a shock, but I don't think it's anything that, important.
Yeah.
Not important, but anything groundbreaking.
Yes. Anything new, and also, aren't we going to get Fed minutes tomorrow? Or
We are. I mean, and the Fed minutes. The people sometimes get this confused on Twitter. It is not a Fed meeting tomorrow. It is just it's just the minutes from the meeting from 3 weeks ago. So. We've heard from every Fed speaker since then. We've heard Powell speak a couple times since then. So, unless they reveal something that you haven't heard, it shouldn't be that too much of a shocker. However, the market, and just like I think today was just an excuse, like the market was already leaning down going into that Fed speak. So you just kind of have to understand, like one of the things that I look at, which is on the left of my screen, is what's called, market breadth. Right. And that's also one of the things that is kind of, I look for confirmation and I look for things that are confirming and look for things that are diverging. Right. And one of the things that we really haven't seen in this move up, we've seen strong market breadth. Right. There's been an expansion in the names that are advancing versus declining. And but that might change. Right. And like today, again, one day is not a trend, but today was just a day that the market breadth opened up, or the way that we opened up, we just started to see more declining names than advancing. So that gave a little bit of a clue for the day. And when I see this type of thing, again, this is a homemade indicator, it's a proprietary indicator, but it just looks at volume associated with advancing and declining names. And when it's dark red like this, I don't really look to do too much until the end of the day. Just because it's telling us that we're in a difficult market environment for the day.
Christian Fromhertz runs Tribeca Trade Group. Great follow on Twitter. His handle is on the screen at @CFromhertz. Christian, talk to you again in a couple of weeks. Thanks for coming on today.
Absolutely, thank you, and stay away from those airports.
Same to you, man. I think that's advice for all of us. Just stay away. Just don't travel. Traveling is fun, but is it worth the hassle? Is my question. Is it worth the pain in the butt? If you're going to travel to the FinTwit conference in Vegas in May, or travel to Miami for the Benzinga Cannabis Capital Conference in April. Other than that, it's just such a hassle. Anyway, we got 2 minutes before our next guest is going to come on. Dave Mazza, talk some leverage ETFs with us.
I was talking some leverage ETFs yesterday. I was trading some TQQQQ. Is that too many Qs?
I think it's one too many Qs.
One too many Qs?
Yeah.
Which isn't as cool as a
Direxion. What is that? That's like the inverse. I don't know what that is.
TQQQ.
Is that the long? Is that
triple leverage? It's just three times.
Is that's the long one? The S is the short one.
Correct.
I can never keep them straight
S,
in my head.
Come on. S.
Short. S for short. But what does T mean?
Triple.
That's why I don't work in the business.
But yeah, I mean, like there's an S Dow one, too. I mean, even some of the, I'm trying to think of the Direxion ones, if they have any S ones. Oh, maybe not, because they have like yin yang. They have Direxion. They're more creative than investment.
Their naming conventions are off the wall in a good way.
Nail's one of my favorites, actually.
Yeah, I've always been partial to Gush and Drip personally. I find that to be highly amusing. Here, what else? They have Want,
Moon.
right? Wait, they have Want for the discretionary ETF. That's funny. Cure.
I think Moon's good too.
Moon is good. Pill for the pharma leverage one. Pharmaceutical and medical leverage is PILL pill. That's a good one. Cures healthcare. Anyway, okay, enough of this. Let's just bring Dave on and talk let's talk about like actual funds and like trading opportunities here. So let's get Dave Mazza on from Direxion. Do that right now. How's that for an intro? Dave Mazza, Managing Director, Head of Product at Direxion. Dave, how are we doing? How's your Tuesday?
Doing well. How are you guys doing?
Doing fantastic. All right, so we have been doing this recurring segment on this show where we bring you on to talk about leverage ETFs. We've talked about in previous segments as to sort of what they are, how they work, when to use them. I do want to just talk today and be just a little bit more topical, more actionable, We are heading into earnings season. Not this week, a little bit next week, and mostly the week after here. But even just before we get to that, because that causes volatility, which can lead to opportunity. Before we get to that, though, I would just be curious, just to get your thoughts on any observations you have in the last couple of weeks in terms of opportunities that you're seeing, whether it's via trading volume or flows or conversations you're having with clients. I mean, how are people using specific leverage ETFs now?
Look, I think there's always a bull and a bear case, right? And
Yeah.
that's what makes a market. But for the kind of the better part of the last 3 years, it's really, if you've been a bear, you probably were hurt up until November. But what we're
Right.
seeing with flows, and this really was solidified if we look at the kind of quarterly data, is
Yeah.
3 distinct camps. So we have what I call the risk on camp. And these are folks who are continuing to trade SOX L, which is the 3 times bullish semiconductors ETF. And here is where, particularly at the start of the year, today's a tough day for semis, I think, as people are seeing, but wasn't necessarily a great trade, kicking off 2022. And we've seen, particularly on this chart, I think it's a good one. It's kind of trying to find a bottom here. But people are saying, hey, the noise that we're seeing in the market, this rotation of value, I'm not buying it. I'm sticking with semis, right? So that's been a distinct camp. If we look at flows, they've been kind of through the roof in this fund.
On the long side.
On the long side. So people are,
Interesting.
anytime, days we see, the tough days, and
like today.
Today, I'm gonna at least if for whatever reason, usually flipping to a new calendar quarter doesn't change investor behavior, right? Until we see some kind of distinct catalyst, maybe with earnings season, particularly with some of the M&A activity that we've seen in semis. These tough down days, people were buying in mass, kind of trying to play that rebound, and it's kind of worked, right? If you bought it a down day, particularly look at the trend we saw since mid-March. That's been a generally a favorable trade. Now, if you were buying it at the highs at the beginning of the year, not so much. But the trade has been down day for semis. People have bought into SOX L. So that's what I call my risk on camp.
Interesting. And that's been that way for this year.
Exactly. So since we really saw that drawdown, that's been in place through February, through March.
All right. So you got all right. You got some people trying to just buy the dip. People that are risk
buying
on,
the dip, right?
They buy the
dip.
dip.
Risk on, they buy the dip, right? So maybe you could say that's not surprising if you think about it from the buy the dip mentality, which has worked again for the better part of the last 2-3 years. Yep. Now we also have emerging, and this is a greater number of funds, but this is what I call my rotate camp. And one in particular that we talked about before is, as you were saying, is your gush. Then you have your deposit, which is on the financials. So people are saying, you know what? And look at gush, right? So pretty opposite chart to what we were just looking at with SOX L. Here is where people have been saying, well, look at the trade, right? Look what's going on with uncertainty with the war in Ukraine. Look at what's going on with oil prices, even though, they rallied high and they've kind of fallen back a bit, but the kind of macro thesis of, that we're in an environment where inflation is here to stay and commodity prices might be high, people are gravitating toward gush as your rotate camp. We're also seeing activity in financials, particularly FAS, which is the mega cap financials. I think I would expect that fund to continue to see activity heading into earnings season as we have the big money center banks. That has not been kind of the one-way trade that we've seen with energy, right? But it fits, right? It's firmly in that value bucket. It was out of favor for a few years. The challenge with financials, I think, as many people know, is what's going on with the yield curve, right? Pretty conflicting signals if you look at the 2 versus 10s. But now you got people coming out, well, don't worry about that. Look at the 3 months versus the 10-year, which is still positive. It's impacting banks, but I think that is an area that, if investors are looking to rotate out of growthier areas like tech, would look at. But the energy trade has certainly been a cleaner one.
Do you often see a shift in flows ahead of earnings season? You mentioned the banks because they're the first to report, and I think they report like a week from tomorrow, really. So we're a week out. Do you often see flows? We talk about on pre-market prep a lot of times the run up in individual stocks into their earnings reports.
Yeah.
I'm wondering because these are obviously sector wide plays, but do you see a run up, or in terms of flows at least in the sector, ahead of an earnings report or a series of reports, I guess?
Yeah. So if we were to take like a huge step back and say, let's decompose, every earnings season over the last, a few years, if not maybe go back to post the financial crisis, right?
Sure.
Yeah. You tend to see either increased activity, both on the bull or the bear side, in those couple of days heading into the first reporters where you get your JP Morgans, your BlackRocks, Bank of America, Citigroup, et cetera, when they all kind of come out and really set the tone for earnings season. Last earnings season was a bit different. And here's why is I think particularly at the single stock level, we did not see companies who beat on both the top line and bottom line do that well. In fact, some were punished because they weren't upping their forecasts for the rest of 2022, if not 2023. And we had all these macro headlines that were really coming to bear at that time. This is, I think, going to be barring some new news, which always can happen with the situation in Ukraine and then the situation with commodities. I think this earnings season is going to be a bit cleaner at the single stock level. And there, I do think we're going to go back to kind of, for at least for a couple of weeks, that macro overhang that the markets have had, take a step back and single stocks kind of give their moment to shine, both positively or negatively. But I would for people who are trading, again, who have the ability and interest in trading these leveraged products, to look at some of these funds and say, hey, what was volume like? Particularly with FAS, FAZ, which is the bear fund, and then Deposit, which is the regional banks. They report a little later, but kind of look at some of the activity there, particularly the volume, to see if, hey, maybe that's interesting, or someone trying to kind of think, are they buying the dip? Are they positioning for something that could be coming from the early reporters?
Okay, so you specifically called out Soxl, SOXL, that you're seeing people come in and buy the dip on days like today. Are there other clear as day flow trends that you're seeing, maybe away from, and aside from energy as well?
So we got to take a look at what's happening in China. So CWeb, which is a 2x bull fund, leveraged China internet. Performance has been ugly.
Wow, look at the volume. Look at the volume
here. Look at the volume, exactly.
Holy cow.
Off the charts in the last couple of weeks, particularly, and it's kind of stayed high, even as the kind of China headlines have come down. So talk about buying the dip, and they haven't. If people have, if they bought it on that kind of May 15th, 16th, and kind of sold it, you probably did pretty well. But if you were thinking about that as a long-term trade, you can see it hasn't really done much yet, and a long way to recover. But this is kind of your China tech trade, just these China internet names. And man, has the volume picked up in this particular fund, which I'm keeping an eye on this also for that kind of risk-on camp. And if we see performance begin to recover, I don't even think getting anywhere close to where the fund started at, but just to kind of make more of a positive trend, I think we're going to see volume continue to pick up here.
And can you talk about what volume indicates for us when looking at one of these funds? Because volume in a leveraged fund can mean something different than volume in like a regular non-leveraged fund or even a stock, because we know that most if not all the people that are buying this fund are not buying it for because they have a year-long time horizon. They're buying it for the short term. So does volume just indicates what? Just increased people have short-term bullish theses? Is that what this tells us basically?
Yeah, so essentially the way to read that, and then I'll kind of go back and combine a few pieces of the puzzle together. But if we're just looking at volume in this particular case, that's exactly how to read it. is that, you know, the camp of traders who look at CWeb are saying, hey, this thing has fallen too far, too fast. I'm going to step in and see if I can take advantage of a reversion to the mean. And we certainly saw that in March. Now, if I take a step back, one of the things that we tend to look at is volume, of course, happening. And this applies to single stocks ETFs, but it's actually even more interesting with leverage products, is volume happening on a day where prices are rising or prices are falling, right? So when we saw this, I actually find it an indicator to me where there could be a reversal. Again, these things are not as predictive as anyone would like them to be. If we see massive volume on a down day, that's a sign that, hey, traders are coming in here and they're sensing something, or the technicals are telling them that there's going to be a reversal. That is actually a bullish sign for leverage ETFs that have fallen, like this chart indicates.
So I guess, how are we to interpret this? We've got elevated volume. It's come down, but it's still way up to where it was in March still, right? The first half of March, like if you go back a month ago. And yet, as we see here in terms of the price action, it's been relatively stable. So how are we to interpret the still elevated volume with relatively quiet price action?
Yeah, on one hand, you could say hard to say. However, this is not. This has become a bit of a different trade, and here's what I mean by that: is that when we saw that massive spike in volume on really sharp down days, and then continued on those up days. This to me, you know, that's a more clear-cut signal. This to me is a sign that, hey, people are remaining bullish, even though they haven't necessarily been rewarded in that yet. It also is simply, to be quite frank, a sign that this fund has more eyes on it, right? So that's the other thing that's important with ETFs. They're not single stocks, right? It's that, hey, there was certainly a group of people trading this fund, CWeb, and you know, as the sponsor, we're happy for that. But something changed. This fund got on the map of different traders in mid-March, and it hasn't fallen off. And you tend to see that with our leverage and inverse ETFs. And they can be episodic, right? There could be an environment where a nail, not to totally change the topic, is seeing elevated volume, and it kind of stays that way through time. CWeb is a fund that, you know, had certainly a camp of it. Yeah, exactly. So, you know, this is a great way of looking at it. Is now it's volume. It's episodic, but it's high, right? So regardless of its particular trend. So really, I think an important sign that someone, you know, more capital is being put to work. There's more trades. So if you're using volume as an indicator, if you're using price or technicals or whatever, that actually change exactly. So this fund has now changed. So if you were cautious on building your model or trading this fund because you didn't know it, you didn't see enough volume compared to others, it's still not a lot compared to nail, but it's changed. And we tend to kind of see that not go back to zero, or, you know, not that it was zero, but revert all the way back to what it historically was.
I would be curious to know from you if you're seeing any sort of volume increases or flows or anything on any of the fixed income leverage funds, especially in the past couple of weeks here. We can look at TMV, perhaps, which is the 20-year bond bull fund. Where's my chart? Here's my chart. TMV. Let's pull that up right now. I'd be curious to see what the volume.
Pull that up, because that's kind of a fascinating story here. So this is your bearish long-term treasury.
Right.
So you know, in fixed income terms, you know, that there's 3 times the negative duration exposure, and in an environment where fixed income has been challenged, you know, this fund has done quite well. And here what we've seen is you know, a bit of unique activity where and I actually think that this is going to continue for some time, is that we're really seeing the TMF, which is the bull, and the bear, which is TMV. If there's one area, if we look at just the ratio of assets, if we look at the volumes, if we look at where we're seeing really good fighting, right? So the bulls and the bears, there's not a clear winner. Now you could say, what do you mean, Dave? Like, look at the performance. That's not what I mean. I'm just simply saying the volume, the flows we're seeing, the asset ratio. There's two sides of the camp playing out in those products. And yeah, it's not a clear-cut signal that all of a sudden people start more. In this case, more money was coming in on a down day versus an up day. It's kind of been steady interest, but of course, we've gone from where we're sitting at 77 today because we know what's happened to the long bond.
Yeah, let me just pull up the TMF for a hot second, just to see here. Yeah, I mean they're moving, they're behaving. Looks like the way they should.
Correct. Exactly.
Yeah. Interesting. All right, Dave Mazza is managing director and head of product at Direxion. Guys, if anyone watching this has any questions about how to use leveraged ETFs or even something as basic as like how the leverage works, drop your question in the chat now. We will be having Dave back on the show again in a couple of weeks for another segment here. But this is your chance, right? The floor is yours. I'm opening it up. Anyone have any questions for Dave? Drop them in. Speak now or forever hold your peace. If not, you'll have to write them down and wait till we bring Dave back on in a couple of weeks here. But Dave, this has been great. And again, we've talked about on previous segments just about how these products are used to express short-term points of view. So I think I like us talking about just short-term actionable trades, what you're seeing, because this is it. This is the practical application of what we talked about.
Exactly. This is all the things we're talking about. Sorry to interrupt you, but exactly. Yep. All the things we're talking about, how to use them over the short term to monitor your positions. This is how you can apply them. And in particular, I think when we come back in a couple of weeks, we'll be in the heart of earnings season, and we can kind of point to some real interesting activity that we're likely going to see either in some of the names we talked about today or some other areas that maybe are beginning to percolate or will, depending upon what happens with reporting.
Oh yeah, definitely. To learn more, guys, click on the link that is pinned to the top of the chat right now. It's direxion.com/education. Dave, a pleasure as always. We'll talk to you again in a couple of weeks. Have a good one.
Talk soon. You too.
All right. And there's the link up on the screen right there. All right. So let's do this. Quantum. Darn it. It's too late. Oh wait, I'm not sure what you mean by penalty.
Tax penalty, maybe? I don't know.
Wait, no, here's what I'm gonna do, Quantum. I'm gonna take a second though, and I'm gonna write that question down right now so that next time I'm gonna ask him that. So give me a minute here. I'm literally writing this down. Quantum. How long? I'm just gonna copy and paste it. Can you hold? I can't copy and paste it.
Dogecoin now up 15% on the day. I got in at, let's see when I got in at. I got in at 12:16 p.m. Eastern, so about an hour ago, an hour and 3 minutes ago, and I'm already up 5.5%. Not bad, Spencer.
Is that why you were so quiet? You're buying Doge?
I was buying Doge. I'm live scalping Doge. My other positions that are open right now aren't really doing too hot. We did get a nice bounce in the SPY. It looks like we were down as much as 0.9%. Now we are back up to only down 0.5%. So
cool.
Kind of, got a little back on SPY. We'll see the rest of the afternoon if buyers continue to come in or if we see just the rest of the day drag. But Dogecoin, that's what I'm watching today, Spencer. That's what I am buying.
Okay, so here's what we're going to do.
Dogecoin to the moon.
Here's what we're going to do.
What?
Is come to my attention
that Dogecoin's the best new investment out there?
No. It's come to my attention that not a lot of people know about the trade ideas page /feed /widget in Benzinga Pro. So here's what I want to do right now. I want to pull Benzinga Pro. This is Benzinga Pro. Mine may look a little bit different than yours, but this is the homepage. When Aaron Bree, for example, has an idea and he wants to
they're
share,
all great, by the way.
Some of his ideas are not bad.
Okay.
When he wants to share that idea, this is how he can do it, and you can do it too. Go to Benzinga Pro. If you don't have it, get it for free for 2 weeks. pro.benzinga.com. There's a discount code in the description. Go to the left side where it says ideas. We're going to click ideas. This is our ideas widget. I'm going to pose as Aaron Bree for a second.
I want to do it.
Okay, it's probably better if you do it because I don't want to pose as you. So
All right.
so going to you're on.
Can you share my screen?
Yes. No, because you're not sharing your screen.
I know, but can you share my screen?
Yes.
Good. All right. So
Okay.
I'm here.
So yeah, you go to the left-hand side.
Okay.
Go where it says ideas.
Ideas.
Bada bing, bada boom.
Bada boom, bada bang. All right. Submit my trade investment idea. I am.
You're bullish. It sounds like you're bullish.
I'm
think
bullish on Doge.
Wait, can I give some real-time feedback? Is it valuable? Because right now it says you can be bullish or bearish. Is it valuable to add like a neutral thing, or is that just a waste of time?
No, because you could straddle. You could be straddling something.
True. Okay, so this is what Aaron's doing right now. Aaron is adding his Dogecoin trade, basically, or idea.
So Dogecoin to the moon is why, but then I'm gonna elaborate on that, extrapolate, if you will. Increased mentions.
Wait. You're gonna what?
Extrapolate.
Okay. I don't know if that's the right usage of that word.
Well, I'm going to extrapolate from Dogecoin to the moon and dissect what that means.
Okay.
Increased mentions of Dogecoin across socials will continue to bolster hype. Elon Musk Twitter news, also a sneaky catalyst.
Quantum, I'm writing down your other question to ask Dave next time.
Investment. Add more details. Will pass this investment along to my kids. Hopefully they will do the same. Risk. High risk. High reward. In parentheses, scared money don't make money.
We have a spammer in the chat who's mentioning let's look at this AVCT. Let's see if this thing is real. American Virtual. It's a $1 stock. It's blowing up. It's blowing up. Elite Snipe says, yeah, blowing up in a bad way.
Oh,
I mean, look at this. I mean, look at this chart. Yeah, I'd say it's blowing up too. Lose all your money anyway. Back to you, AB. So, all right. So wait, what'd you just do? You just typed out your.
It's so quick and easy. It's you type out your trade, whether you're bullish or bearish on something. We'll add a neutral in case you're doing some iron condors or some strangles or some crazy spreads that Spencer doesn't know how to do. But then you type your why, which we're not asking for a PhD thesis here. No, you just need to type like a one sentence thing and say why. So for me, it was Dogecoin to the moon. Increased mentions of Dogecoin across socials will continue to bolster hype. Elon and Twitter news, also a sneaky catalyst. You say a duration. Are you looking at this as a day trade, a swing trade? For me, this is a long-term investment. So that's what I put. And then you put your risk. So I'm not going to sit up here and tell you that this isn't a risky trade. No, it's Dogecoin. It is risky. I would consider Dogecoin to be a speculative asset, a risk asset. So high risk, high reward.
You can leave comments. This is the reason we're bringing this up, though, is because this is a really good way to source ideas, right? To just get ideas.
Yeah, I mean, look, the one right below mine is Nick Shaheen.
Ring.
This one might be a little bit more, laid out. The plan might be a little bit more laid out than mine on Dogecoin, but we can see down here there are some great trade ideas, right? Mitch has a few on. He's bullish on lithium. Hot Stocks Luke, bullish on SPY. The market has had its 3-month sideways cool off. Inflation and geopolitical news it out. I don't know what that means.
I think he meant news is out.
I don't know. Luke?
And he's not here. Anyway.
I think the major indexes charge higher before they go lower. Duration swing trade. Awesome, man. Thanks for the insight.
It's such a smart ass. Anyway, no. So the whole point that I bring this up was, again, a great way to source ideas. Aaron and I are going to be more active in here going forward, but this is not a widget that we talked about a lot in Benzinga Pro, but it is one of the things that we get as feedback, like the most common things or complaints that people have about Benzinga Pro, frankly, is like, a lot of it is self-directed, right? You have to do the work yourself. You have to know how to use the tool. You have to know how to use a screener, know how to use a scanner, blah, blah, blah. This is literally spoon feeding ideas to you. This tool was a result of us getting repeated feedback that it was just too hard to find ideas. Spoon feed it to me. Here you go. It's there. It's in the ideas widget in Benzinga Pro, where people are spoon feeding their ideas to you, and you don't have to agree. You can take the other side. That's cool too. The whole point is ideas. So AB and I are going to be in here more often, posting ideas as we have them, as Aaron Bree just did. So check it out.
I just did another one. Bearish on Baba. Why? COVID cases rising in China. They don't have the same vaccines we do. Will get worse before it will get better. Duration, swing trade, 1 to 2 week trade. Risk, high risk. Buying $105 puts that expire April 14th.
Okay. There we go, guys. Check it out. 7th721 agrees with you, I think.
Who?
7th721 in the chat.
Oh, for Dogecoin?
Yeah.
Yeah. Let's go. Let's do price predictions on Dogecoin real quick.
Right now we're at 16 and change. I'm gonna go with by the end of the week.
Wait, 16 and change. We're at 17.5, brother.
Oh, excuse me. 17.5. Then by the end of the week, wow. By the end of the week, we'll be at 7. We will end Friday. Friday at 4 o'clock is what I'm going to say. Friday at 4 o'clock, we're going to be at 17.25.
Wow, this thing's up 40% over the last month. All right, here's my price prediction. I think as soon as we get, we're going to get some sort of a Twitter, Tesla, Dogecoin collaboration. I don't know what that looks like yet, but Elon's going to find a way to connect the dots. I think we're back above 20 cents by this time next week, by next Tuesday. So we'll call that April 12th. We will be back above 20 cents on Dogecoin.
April 12th? A week from today.
Yeah. And let's pull out the 5-year chart on Dogecoin. This is right around April, right? Is right when we saw this run last time. See this move right here?
Yes.
That's
from
a
very good point.
April 2nd to April 15th. April 12th is what I'm calling for next week. This could be a cyclical asset.
Idea. My question is this whole thing related to Elon and Twitter? Is that what this is about?
I have no clue.
I guess I shouldn't. It doesn't matter.
It's just
it doesn't matter.
It's just a snowballing effect, right? The price is going up. So now more people are talking about it online. More people are talking about it online. More people go to buy it. So the price continues to go up. Then the price is moving up even higher. So then more and more people are even talking about it.
Yeah. Sorry, my mom is apparently, so my mom just texted me my aunt's office is moving.
Oh, I'm
I guess. No.
Oh.
The office is moving.
Oh.
There's nothing to be sorry about
so
that.
Happy.
So they're giving away everything.
Oh.
So my mom was
iPads?
like, oh shoot. So my mom just said, "Hey, I'm at your my aunt, your aunt's office. Is there anything that you want? Any office equipment that you want?" She keeps calling me during the show. Should I answer?
Is there anything good? I mean, I don't know what's in your aunt's office.
I don't know either. Should I just answer?
Sure. Tim Quast is about to come on, so I can roll with Tim Quast.
Hey, mom, I'm on a show. What's up? No, it's okay. It's okay. Oh, she called me by accident. All right, goodbye. Oh. She didn't mean to call me. Anyway, I keep telling her, like, I was like, "Can you get me some computers?" They don't have any computers. Can you get me some monitors? Give me some mouses, mice, keyboards, chairs, maybe. I don't know. Should I ask if they have iPads? I'm gonna ask if they have iPads. She keeps. I don't know. Anyway, that's if I seem distracted, that's why. It's because I'm trying to get some free office equipment here because of the supply chain, man. Supply chain's all mucked up.
Well, I gotta
get some free stuff while I can.
Do you know what's not having supply chain issues?
So, some pen holders. There's an idea. A desk fan. Now we're talking, Tiny Pie. Maybe you're right.
Dogecoin.
Wait, I asked if they have iPads. She goes, huh?
Dogecoin is not having supply chain issues because the supply is limitless.
Yeah, that's true. That's true. Anyway,
no supply issues. So no supply chain issues for Dogecoin. Let's continue talking about supply though.
Let's do it. Let's do it.
And bring on our man from Market Structure Edge, joining us from who knows where, Tim Quast.
Hey, Tim, I missed you. I missed you yesterday.
Oh, well, I missed you too. That's quite a lead-in. That's some new bumper stuff that you're doing.
Yeah, we're always
very impressive.
Yeah, we're always trying to add new stuff, new bells and whistles, because we know people don't come to us for the content; they come here for the bells and whistles. So we just want to add. We like adding some new things all the time. All right, what were you
doing that was better than pre-market prep yesterday?
At the exact moment you were on, I was getting ready to take a nap. I had flown back from Vegas and I landed yesterday morning.
Oh, did you?
And so first I had to wash Vegas off of me, because you know how it is. It's just like it's like under your skin. It's disgusting. And then
every time you wonder why you go. Right after at the conclusion, why did I do this again?
Why did I come here? I don't want to be here anymore. Anyway, how are things on your end in terms of the market?
Good. It's fine. You know, it's as I said to the edge users this morning. There are elements of the market that have enabled it to be like the Modest Mouse song, so that everything just kind of floats on, and there are clear reasons for that. But you know, it's not a great market. There are always things to trade, and we can talk about what those are. What you missed yesterday is I said to the pre-market prep folks that the only thing left in the market with rising demand is utilities, and so you can see that's they're doing fine today, and. Contrary to what you're hearing everywhere, tech isn't down today because rates, rates are rising. That's not the reason. It's new month, new money, but it's a very small pattern. So as we entered April, we got a little bit of a bump for the markets, and particularly tech, because that's the thing folks were adding to, but it's not very much. The biggest reason that the market has held up well, believe it or not, since you mentioned it, Aaron Bree, as the lead-in, which was a good segue, is falling supply. It was falling supply. It's hiccups in the supply chain. And if that happens in the equity market, prices can rise. And we can take advantage of that, traders. You can see that stuff occurring and you'll know where it is. You just have to be careful that when the whole market is topped, those things can disappear on you very rapidly. And so you have to be particularly nimble.
So Tim, I want to ask a question, because in my let's just say novice investor brain, I see like more volume as bullish and less volume as bearish. But yesterday, the Qs, the Invesco QQQ index, saw its lowest volume, I believe, of 2022, yet it was up 1.5%. Now, I had my own theory, because last night was the championship basketball game of the NCAA tournament, and QQQ,
whatever that means, I just go around bleating it because that's what the Jayhawks do. So
no, I'm not a fan of that.
Keep going,
Tim.
Yes.
But I'm just. I went to Mizzou, and we have a big rivalry with Kansas. So
no. You are not their rival. So, sorry, we're not going to talk. Moving on.
Wait, what?
Sorry, I don't forget I said that.
All right, we'll talk about that later.
We'll talk about it later. Yeah.
My theory was last night, the basketball game, right? The championship game, the crescendo of this whole thing. Invesco QQQ is the official ETF of NCAA basketball. So it would only make sense that the ETF would be up on the day of the championship. But I have a feeling that you have a different explanation.
I do, yes.
Okay. I had a feeling.
It's It's the I want to just steer you gently away from doing what the CNBC pundits do, which is casting about for some correlation, which proves to be false. So no offense.
So
to the folks on
correlation.
CNBC.
So you're saying
Right.
correlation does not equal causation?
True. Yes.
Okay.
And there are all kinds of false correlations. When there are low volume days and things go up, what it really means is that the cause is derivatives. Just remember that if there's a low volume day and things go up, what is happening is that the drivers of the gains are occurring off of the equity market and in something else that we can't see. I talk all the time about bent light. That if you're looking for planets that can't be seen by the naked eye, what we look for, if you're an astronomist, is bending light, because it's evidence of gravity. And what creates gravity? Bodies in space. And so the same principle applies in the equity market. So when you see that, you can just about rest assured that it will be a one-day rally, because it's a new month. So because big institutions don't want a lot of exposure, they say, instead of buying the stocks comprising the triple Q, let's just buy some futures. And so that occurs off the market through your prime broker, typically. And a prime broker, by the way, folks, defining terms, is a brokerage firm that supplies services such as access to capital, equities, derivatives, bonds, all that stuff, and they support the transaction. That's what a prime broker does. And so when that's happening for large institutions, you can have a low volume day, and yet things go up. Secondly, high frequency traders will know it, and they leave the market. And they're the ones that create volume. Volume is the presence of constantly changing prices. That's really what creates it. And so where there's a burst of volume, there are high frequency traders. Where there aren't, the machines believe, ooh, we don't want to be in the middle of that. So there's your couple of market structure lessons for today.
So essentially, in just terms of simple supply and demand, if demand stays the same, but the supply is lower, that would cause prices to increase.
Yes, and let's look at a couple of examples of that. Let me share my screen, and we can do this. We can do it with the FANGs. I think the FANGs are a reasonable example of this lately. So here, if I go over to here, let me get that out of the way.
Oops, sorry.
You really see this all across the market, but I'm going to scroll down on my dashboard. So if you've never seen this before, folks on Benzinga, this is the Edge dashboard, and it's like it's the control panel for everything that's occurring in the market. Well, here are the FANGs. I have 11 components because I put some other stuff in here. But you see how demand is very, very strong. It's coming down a little bit, but look what supply did. Supply just dropped. So that's what gives stocks lift. It's almost like an airplane wing. Right? The trouble is, it's dependent on a decline in supply rather than an increase in demand. And that tends to have it has a shorter length of time that it will last. And so you want to know that. Doesn't mean you can't trade stuff. If we click through here and look at the components, here they're all from 6 to 10. Netflix is the worst, which it's been for a while. 6 out of 10, demand trend is down, 54% supply. That's not great, but it still produced some gains. At the top, unsurprisingly, is Tesla at 10, topped, but also 56% short. So it's had a fabulous run, and it's all Elon Musk all the time currently with his stake in Twitter, and now he's going to be on the board. But this is what gave the lift. So even though the supply levels are very high, to me, 58, 59, 60%, not great. But that decline, coupled with very stable demand, has lifted the prices. That's how it works. And you can always see that, traders. You can, it's not perfect. It's not linear. You can have a down day, but if that's the central tendency, it will have a bias to the upside until that changes. If this ticks up, the run's over. And then you should take your money, go on, take the money and run, as we always quote Steve Miller on this program.
We do. Question from the chat here. If you can go to a specific name or two.
Yeah.
I think it was about was it EVGO? Was that what it was? Yeah, Eric
EVGO?
Taylor asked about EVGO for supply and demand.
I have that in an EV portfolio, so you can set up an EV portfolio, and it's a great way to see things. And by the way, all you have to do with that is change this to portfolio. Maybe I'll do that just for the sake of opportunity, and it's going to show me everything that's got EVGO in it, and it's a consumer discretionary stock. Maybe I don't have it in my EV portfolio. It's possible. Let me change this back to stocks, and I'll just pick up EVGO. So once again, you want to look at supply and demand and see what the divergence is. There you go. That's why it's done such a great job. Do you see it? Even if you knew nothing about Edge, what would this tell you? I mean, look at that. That is an absolute collapse in the supply chain, and that will drive the price up. So what did that? Well, that is actually
the sentiment is off the charts.
It is.
It's actually off the chart. Yeah.
And notice that it's done very well since it rose above 5, and it stayed there the whole time. This was the worst performance for the stock because there was a big surge in supply, then it plunged, and price resumed rising. You will always know those things are occurring. And again, it's not perfect, but you will know whether you have higher risk. If it's above 5 and all of a sudden this jump in supply occurs, I'd probably leave there. But then I have a short-term 10s that looks for exactly this condition. Things that are at 10 with falling supply. And that you can trade. Realize that every day you have to look at it and go, ooh, if that changes, you got to take your money because it can change on you just like that.
Yeah. Wow. So, and then actually, I want to pull up the actual chart of EVGO. Just
okay.
I want to look and see. Yeah. I mean, you can see. You can clearly see. Look, there's a weekly. You can clearly see it's been strong. So
it's been good, right? When that changes, particularly when this supply chain begins to recover and there's supply, that's going to pull price down. And you have to be ready to leave.
Yep. All right. What about Walmart here for quantum?
Well, sometimes Walmart is a perfect proxy for the market when it's a value market, and it's in a colossal number of ETFs. It's used heavily. It's spent a lot of time at 5 or better. The supply trend is down. It's running just a little bit above the trend here, so price flattened out a little bit. But again, that's a great core stock. So long as it's above 5, it's a great thing to have in a portfolio because you'll probably do at least as well as the stock market. And if that's the case, well, then just own Walmart. It's a great a place to be when there is volatility and uncertainty in the markets, and that is consistently true. Notice again here that when supply dipped, price rose. You're going to see that.
Yeah, great call out. Yeah, the relationships you talked about correlation and causation not necessarily being a thing, but the relationship between supply and demand and price is remarkable. How it's not perfect, obviously, because if it was, you wouldn't. It would just you'd be living on an island somewhere,
just
but like
flying around in my private
right.
But it
is pretty consistent. Praveen wants to short Amazon.
Okay.
So Praveen wants your take on the Amazon supply and demand here.
Well, that's great, Praveen. Supply demand convergence is a great thing to short. Supply demand divergence go long, convergence go short. And it's starting. It's not there yet. So once again, we had this big surge in demand. Supply was pretty high, so that kind of constrained price. But the moment supply started to slip, price has done beautifully. It has just turned, and it's above 50%. It's not near the 30-day. We use a 30-day trend because the market is very short term. If you try to measure the market long term when all the behaviors are short term, you're going to constantly get chop blocked. So you have to just measure it the way it works. So it's not there yet. It's not the place to be. You could go find that though. You could go create a dynamic portfolio that has very high levels of short volume. So you want supply that is greater than or equal to, let's call it, 65%. So, and then I want to find demand that is falling. So if I go pick up market structure sentiment, that's demand. And maybe I just say that the trend is down. We can refine it more, but this is a way to do it. So those two conditions, let's see what happens. Probably going to give me a whole bunch of stuff, but it's a great way to go look to find stuff that's like 70% short and is likely to decline. And so here, I don't know anything about this stock. It's a tiny little stock, has no liquidity, very risky trade. I like to trade stuff with $3, $4, $5, $6, $10,000 per trade because I know I'm not going to get caught out and give up half my gains trying to get out of the stock. So maybe we come down here to Best Buy. Let's look at Best Buy. So, is this a stock to own? No, it's not. Supply is very high, demand's falling. You say, well, but it rose yesterday. Ooh, but that's not the kind of thing that gives you sustainable gains. Now, it might be a very short, meaning 2-3 days, but that's what you can look for. And we can find much more pronounced conditions than that. Sure. But that's a great way to think about it, Praveen. You're doing the right thinking.
Well, let's look at. I'm trying to spread the love around here. Okay. Let's look at a couple more. Trying to find. All right, let's look at like a Kroger here.
Okay.
Since we looked at Walmart,
is that right?
Look at Kroger.
KR. No.
KR.
Thank you.
KR.
All right. You guys are the symbol maestros, which would be a good name for a rock band.
Ooh, I like that.
Right, the symbol maestros. Yeah. So, not bad. I wouldn't call. So Kroger is spending most of the time at 5. And by the way, before it rose, look at this. Before it shot up because it had good results, demand was rising and supply was falling. You can check that, traders. If Kroger's going to report results the day after tomorrow, let's go look at the supply-demand equation. Demand is rising, supply is falling. There's a trade to make. So that's the kind of condition that you can capitalize on. Now it's a 5 with supply just above trend, but the trend line continues to be down. Not much gain. You're not going to get much gain in Kroger now, but it's a very safe place to be. It's unlikely to just fall apart. So if you're preserving capital, if all of a sudden the market nosedives, then this is a place to be.
How about AMD for retirement? AMD
for retirement. So you're talking about a very long range view of AMD. So in that case, let's expand our range out because we're not going to trade this short term. We want to look at a long term. Let's look at a year and just look at the supply demand balance in AMD and see how it's doing. The thing to look for is how much time does it spend above 5? By the way, you can easily calculate that exactly. If you go over here to Profiler, if I do that, it will take us over to our backtesting engine, and you could look at this time frame and say, well, how much time is AMD spending above 5? Well, an awful lot, right till November 15th. This is where all tech broke down. It stopped spending more time above 5 than below. We've seen a return, but it's a short run. I'm not, if I look at this, how's it going to perform? Well, it's going to be fine. If you've got a long-term horizon of 10 or 15 years, obviously AMD is a great stock to own. Is it going to give you the kind of returns in the next, year that it did in the trailing year to November 15th? I don't know. It doesn't look like it has the same sort of supply-demand bias that it had before. But,
Okay.
long-term, it's a great stock. Okay. Great company. That's what I should say.
Yeah. All right, guys, I do want to mention that marketstructureedge.com, I'm going to put the link up on the screen. We do have a discount code that's only available for a couple of more days.
And I have some breaking news. Literally within, it happened.
Wait. Hold that thought. Hold that thought. Hold that thought.
Okay.
All right, what do you got?
Because you are going to mention Market Structure Edge. So
yeah.
It's been like pulling a molar without any painkiller. But we finally have finished the update to the Edge website, not the app. The app is we've added some great features to the app. but we have updated marketstructureedge.com. And with our good friends at Madison Taylor Marketing, our advertising firm here in Denver, and they have done great work. But you see that? That's pretty cool, right? Take gains, not chances. Watch that. That's
nice.
good.
Nice. Like new front door.
So, new front door. We have a new front door, and a lot of the app, so that if you can watch you can see all these features of the app now. And the best thing, of course, is you've never seen an application like Edge. So we're very happy with it. Fine to have that done finally. It's you guys know what work it is to keep your marketing face up, and you have to do it. So I don't like to do it, but I think this was necessary, and I'm happy with the results. So that you are the first to see it. That
congratulations
just before.
As far as the app is concerned, use the code on the screen, guys. BZFriends20, BZFriends20. That code expires. I believe on Friday. Yeah, I believe on Friday that code expires. That's what I have in my notes here. It says good through April 8th, I think is what I wrote. So
you better use it before Friday.
BZFriends20, marketstructureedge.com. Tim Quast is the guest. He joins us every single week on a variety of our shows, and we always appreciate his time.
Always a blast with you guys. Thank you.
Tim, always a pleasure. We would love to have you back on again. We'll have you back on again soon. So have a good week and stay green.
You do the same. We'll do. Thank you very much.
All right. Alrighty. All right. Before we go, we have a couple of minutes left, but before we go, we have some housekeeping items to attend to.
I need to know what you mean about Mizzou not really being rivals with KU. That's news to me.
They are your rival. You're not their rival. That's what I was trying to say.
Oh, no. We are.
It's not reciprocated.
Maybe not in basketball.
Right.
Football.
Whatever you
say. They don't want this business from football.
No, they don't want the business. All right.
They won't even schedule us in football.
What about like field hockey though?
I don't know.
I don't know. All right. Some housekeeping items to address to you. Housekeeping item number 1. Big congratulations to what's this person's name?
The person who won the Benzinga bracket contest?
Matt Morton, the winner of the Benzinga bracket contest.
Oh, we actually had a lot of people pick Kansas.
We had 9 out of, I believe, 50.
Did he have KU, UNC in the finals?
No, he did not have UNC. He had Duke. We had 57 people fill out a bracket, and 9 of them picked Kansas.
Wow.
And Matt Morton is our winner. He has been connected with the powers that be here, who are going to give him a prize of some sort. I don't know what that is, but congratulations to Matt Morton on winning the Benzinga bracket contest. There are other brackets though that are not done yet. We have to mention the Benzinga stock market and NFT madness brackets, both of which are currently in the final round. Oh, no, that's not true. The NFTs are in the semifinals. We'll talk more about that on the Roadmap show. But the stock market contest is in the finals right now. Allow me to share it on my screen with y'all. There it is. You can see Tesla rather easily advanced to the finals, but not nearly as easily as Camber Energy with 95% of the vote, destroying Moderna on its way. In hindsight, Camber Energy was very underseeded as a 13 seed. Let's just scroll up here to the top and let's just look at how Camber is. Oh, Camber came from the bottom. Camber came from the bottom. Yeah. So Camber, let's just go through and look here. Destroyed Nokia, Virgin Galactic, crushed AMD, then crushed Moderna even more. Holy cow. So now we have Tesla versus Camber Energy. Voting ends April 8th. Who do you think the crowd is most bullish on? That's the question. It's not who are you most bullish on. Who do you think the crowd is most bullish on? Oh, there's my little pop-up. I'm going to drop this link in the chat. You have 3 more days to play along. at which point we will award a winner and give that winner, I believe it's $1,000. Let me get the details up on my screen. $1,000 worth of Bitcoin. It says it up on the top there, right? It says it up right here. $1,000 worth of Bitcoin. You have 4 days.
Holy cow!
So
that's a lot of Bitcoin.
Yeah. Well, I mean, it's $1,000 worth. As a reminder, a big thank you to Public for sponsoring the Benzinga Stock Market Madness contest. Public.com is the investing platform where you can build a modern day portfolio your way. Invest in stocks, ETFs, and crypto all in one place. So start investing today and be sure to cast your vote for Stock Market Madness. See the link in the description and in the chat to learn more about
I also will
Public.
be actually here. Let me just do it right now. Give me. I don't know, 30
40 seconds,
45 seconds, maybe.
I'm amazed at this Cambria energy. I mean, holy cow! The NFT Madness bracket. While you do that, the NFT Madness bracket is in the semis. We're looking at a final four of Star Catchers versus Doodles, and on the other side is Lazy Lions versus Crypto Deads. We'll talk more about that on the roadmap, which is coming up right now-ish in like 2 minutes. So we have 2 minutes for Aaron to find what he was going to find. But while he's doing that,
I'm trying to find the ESPN fantasy thing for the Masters.
Okay, while he's doing that, as a reminder, guys, 2 upcoming events, right? We have the Cannabis Capital Conference, which is going to be in 2 weeks, right? April 19th and 20th in Miami Beach at the Fontainebleau Hotel. Aaron Bree will be there, and it's like ridiculous the amount of people that are coming. It's our biggest event ever, I think. Mike Tyson, representatives from all the biggest names: Canopy Growth, TrueLeaf, CureLeaf, Cresco, Tilray. The CEOs, the founders, the CFOs, they will all be there. Okay. The link to that event is in the description of this video, as is a discount code. I think the code is still active, but I'm honestly not sure. And then the May event, the FinTwit Conference, we have to get Joan Lepton back on the show. And the FinTwit Conference, May 13th and 14th at the Aria Hotel and Casino in Las Vegas on the Strip. I was there the other day. I can attest, it is gorgeous. The link to this is also in the description of this video and on the screen. Use that code to sign up.
I don't think ESPN has a bracket or a pool challenge for the Masters. I find that hard to believe.
They're all talking about Mullen Automotive right now. We're seeing a spike in Mullen. Let's take a look, see how we doing. Yeah, we had a little bit of a spike there.
Oh, here we go.
Just seeing, I don't know. It's interesting. It's a bit of a high flyer stock. Are you good, man? You got what you got?
Benzinga's Masters pool. Make it public.
Are you making one right now?
Yeah, I'm going to throw a link in the chat.
When does the Masters start?
Thursday.
We got time. We got tomorrow.
I know. I'm just going to throw it in there tomorrow. I'll throw it out there tomorrow, but if y'all want to join it.
All right. We're done. Wrap it up. Let's smash the like button. Please and thank you. Subscribe if you haven't already. Subscribe to Benzinga on YouTube. Become a member if you want access to exclusive badges, emojis, and more content. Check out Benzinga Pro. Free for everybody for 2 weeks. pro.benzinga.com. Check it out. Free 2-week trial. If you don't like it, fine. But at the very least, just try it. And thanks to our guest. And that is a wrap. We are ending the show, going live to the roadmap. Everyone have a good rest of your day. And I'll see you on At the Close in an hour and a half.
Woo!
Boom.